morning, everybody. Thanks for taking the time out today. It's summertime here in the U.S. and we just had the 4th of July holiday, so it's kind of a shortened week, and it's even though it's a shortened week, there's still a lot of, I don't want to say fireworks going on in the market, but the markets keep moving, and as traders, we want to always be looking for good trading opportunities. And what I'll be talking about today is how to find winning trades in the order flow. Now, what you're going to learn today is three things. Why order flow? What makes order flow so important to us as traders, and how order flow will help your trading, how to find winning trades in the order flow. And I'm going to do it, fairly quick. We got 45 minutes today, but to be honest, really learning how to trade with order flow is something that is, once you understand it, is very easy to pick up. And if you stick around until the end, I'm going to give you a copy of my book called Trading Order Flow. A few years ago, probably about 2014, 2015, I started writing this book on trading order flow. It was my way to give back to the trading community. And, as a beginning trader back in the early 1990s, I had a lot of traders help me along the way. And, times have changed. For those of you that are new to one of my presentations, my name is Michael Valtos. I'll just give you a quick background on myself. I started on the CME floor as a runner with Dean Witter Reynolds. That was back in the early 90s. And eventually I left the trading floor when electronic trading started picking up. And I spent about 3 years, on the upstairs trading desk, trading Globex, Project A, which is the Board of Trade, and NYMEX, COMEX Electronic, as well as all the foreign exchanges that were open overnight, trading Life, trading CYMEX, trading, it was DTB back then, which was Eurex. And it really exposed me to a lot of different markets, and it was great because, there are so many markets beyond just what trades in the United States. And after that, I joined EDF Man in Chicago on the global macro trading desk. I spent 2 years there. EDF Man is a big English trading company. After EDF Man, I joined Commerce Bank in Chicago. I was a licensed Eurex trader. I was one of about a handful of people that were licensed to trade Bunds, Bobbles, Schatz, DAX, Euro stocks on Eurex. And after Commerce Bank, right, I joined Cargill, the big commodity trading firm. It's a privately held company, and it's the first or the second largest privately held company in the United States. They account for about 30% of the U.S. grain exports, about 25% of the meat exports, but they literally trade everything under the sun. Everything that's tradable, they trade. And after Cargill, they sent me out to Singapore. Actually, Cargill did. They set up a trading desk. Then after the part of Cargill that I was working for got sold, I took about 6 months off, and then I joined JP Morgan as vice president of futures trading. I spent 8 years there. Now, this was a trading position. This is not sitting in the back office looking at statements or looking at numbers that other traders are doing. This is sitting on the trading desk, banging away on the computers, trading. And in 2013, I left JP Morgan after my first daughter was born, because I want to spend more time with my family as opposed to just basically coming in the office at 6 in the morning and staying there until 5 in the evening. I wanted a life, and I know that trading gives you that opportunity. If you are good at trading, if you are successful at trading, why not just do it on your own terms, right? So I started a couple years later. I started writing my book in 2014, and in 2015, but 6 years ago, I started the orderflows.com website, and it's centered around the order flows trader software. Now, the reason I just talk about the software is because the charts that you see in this presentation are generated from my order flows trading software. It runs on NinjaTrader 8, and it's a volume footprint chart with a bunch of pre-programmed order flow indicators in there to help you understand what you're seeing in the order flow. Now, before I jump into the details, just a brief disclaimer, do understand that trading involves risk, okay? Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. And you should only trade with money that you can afford to lose. Sometimes people lose sight of that. They think that it's a race against time, like, oh my gosh, I lost my job. I'm on benefits for the next 3 months. I got to learn how to trade so I don't have to go back to work. Well, don't give yourself that unnecessary pressure, right? No matter whether you're trading or in doing any endeavor, extra pressure makes people in general perform worse than better. Now, why order flow? Okay, well, order flow allows you to see things other traders don't see because they're just following price up or down, right? You look at a normal bar chart and you're just seeing oil price went up, price went down, and you're not really understanding why price is going up or down. And when you just follow price up or down, you don't see the intensity or the force behind a move. And why is that important? Is because, well, if you don't understand, is the move getting weaker as it's, say the market is going up, but it's going up, on weaker strength, then what's going to happen, right? It's not going to go up much further. It's going to reverse and sell off. And conversely, if the market is selling off all day long, selling off, selling off, selling off, but it gets to that point where the selling really gets weakened and sort of everybody's done selling. Well, what do you think the market's going to do? Well, it's going to stop and turn around and go back up. And if you're looking at just your normal chart, this is crude oil this morning, you're going to miss a lot of this information, right? You can see how the market is selling off, selling off, selling off, then stops and then reverses, quite dramatically. Okay, and if you're just looking at a normal bar chart, you're not going to know what's going on down here that's causing all of a sudden this market to snap back up to where we were before the sell-off. But if you're looking at order flow, right, you can see what's happening in the different aspects of order flow, which I'll explain in a moment. You can see the deltas getting weaker as you're selling off, then all of a sudden you hit the bottom and delta gets really strong. You're seeing buying imbalances appear when earlier there was mostly selling imbalances, and you're seeing volume migrate higher in terms of the point of control, right? And the way I like to describe it is, I mean, sort of this Trump vernacular, it's like playing 3D chess, right? If you're just playing 2D chess, you're just seeing what's happening right in front of you. But 3D chess, you got to look what's happening above and below you and how one move is going to affect everything else. Now, remember, markets trade in a two-way auction, right? Traders are working bids and other traders are working offers. But trades aren't going to happen unless someone becomes aggressive and crosses the bid offer spread, right? Remember, so like for example, the market could be 6 bid at 7, right? It's 6 bid on 50 contracts. Maybe there's 80 offered at 7. Well, no trade's going to happen because it's just 6 bid at 7. For a trade to happen, either someone that's offered at 7 has to go down and hit the 6s, or someone that's bidding 6 has to become an aggressive buyer, and all of a sudden lift his bid up from 6 to 7, right? That's how trades happen. So, just because you see bids and offers, no trades happening until someone crosses that bid offer level. Now, how is the force or intensity of trade measured, right? That's what I said, is the big difference between looking at a normal bar and candlestick chart as opposed to a footprint chart. Well, you can measure it in different ways, right? There's 3 main parts of order flow that are used to measure it. There's delta, there's point of control, and there's imbalances, okay? Now, delta is a difference between aggressive buyers and aggressive sellers in a bar. Now, remember, I just said what an aggressive buyer and aggressive seller is. It's someone who crosses the bid offer line, okay? And if delta is positive, buyers are in control, right? If you have a positive delta, it's telling you that there was, say delta is 1, okay? It's telling you there was 1 aggressive buyer overall in that bar. If the delta is 255, there's in that bar is telling you there's 255 more aggressive buyers than sellers in that bar. Now, if delta is negative, it's telling you sellers are in control, right? So if it's negative 300, when the bar closes, it tells you in this bar, there was 300 more aggressive sellers than aggressive buyers in the bar. Now, delta is important to watch because you can clearly see who's in control of the bar and of the market. So how does it look on a chart? Well, most footprint charts, and mine included, put the delta on the bottom, right? Some people like to put it above or below the bar. I like to have it on the bottom. It's just, it's a nice place to have it so I know what's happening, where to look for it at all times. And you can see there's red color boxes and there's green, right? Red tells you it's negative, green tells you it's positive. Then you can see the numbers, right? So for example, this arrow is pointing down at this bar it's got a delta of minus 50. So it's telling me there was 50 more aggressive sellers in that bar than aggressive buyers. Now, after this low is made, we have a green bar that's got positive delta of 115. Okay, so that's telling me there was 115 more aggressive buyers than aggressive sellers in that bar. So they're outnumbering, the aggressive buyers are outnumbering the aggressive sellers if it's positive delta. And if it's negative delta, aggressive sellers outnumber the aggressive buyers. So as you can see, as the market is moving down, generally you have negative delta, okay? As the market starts moving up, you're seeing positive delta, okay? So that's a delta. Now, point of control, or POC, is the short version of it. Is it's the price level in the bar with the most volume traded in that bar. And most traders think that all traded prices are equal, right? And if you're looking on a bar chart, you don't know the volume that's traded at a price level. You just know that price traded there. But volume matters, right? Not all traded prices are equal, okay? And if you've ever run a business, whether it's, a store or selling something on eBay, you understand how important volume is, right? Because you could raise your prices up and up and up, people will still buy, but it's going to get to a point where you raise your prices too high, it shuts off buying, right? Because it's just too high, people aren't interested in buying it from you anymore. And just as if you lower prices, right, people will think, oh, this is a good deal, it's a good deal, and then you keep lowering prices, people are going to stop buying from you because they think, well, price hasn't hit its low yet. They'll just sit back and wait till it hits its low. So what volume that trades at price is important, because again, if price gets too high, people become disinterested, right? And if price gets too low, people become interested at a certain point, then they start coming in, and then you see volume pick up again. So something that traders don't realize is that it's not so much how much volume trades, but it's also where volume trades that's important, okay? And point of control, again, is the price level in the bar where the most volume trades, okay? So imagine if a price trades heavy volume, well, it's being accepted, right? But what if prices trade light volume? Well, that's probably a sign that that price is being rejected. And there's so many different ways you can use volume. One of the easiest ways to use volume in a bar, the simple point of control, the price level in the bar with the most volume, is by watching, well, is volume migrating higher or migrating lower, right? And it's not like you really got to sit there and scratch your head and try and figure it out. It's simple. You just look at the chart. As this market is moving down, what do you see? It's point of control, 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 lower, 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 right? So lower 1, 2, 3, 4, 5, 6, 7, 8. Then what happens? It turns, right? You got a higher point of control, higher point of control, higher point of control, higher point of control, higher point of control. So as volume is migrating lower, price is going down, right? As price goes up, volume is also migrating up until it turns, right? Until it starts migrating back down again, right? That's how you can watch volume to see market direction, okay? Now, the third part of order flow 101, if you want to call it that, is imbalances, right? And imbalances occur when the market is out of equilibrium. Now, people often have this macro view of the market. The market was out of balance today, but imbalances in the order flow is imbalances in the particular bar. Okay. Now, generally, right, two-sided trade is fairly even, right? You see most volumes go through. Maybe it's when you're looking at the bid offer, it's 6 bid at 7. 50 trade on the bid, 100 trade on the offer. It's when you start seeing percentages, or much more aggressive buying or much more aggressive selling, that's when an imbalance comes in. And you could determine what level you want to use for an imbalance. So most traders use at least 4 to 1. Okay, now you don't have to use 4 to 1, that's 400%. And some use 300, actually some use 500, some use 1,000. But basically when you say 4 to 1, right, to cause an imbalance. So what that would mean is, say the market is 6 bid at 7. If 6 is traded just 50 times, but 7 is traded 400 times, that's obviously greater than 4 to 1. You'd say you have a buying imbalance. And how does it look on a chart? This is how it looks on a chart. I just drew arrows at a few of them, right? So remember, it's a percentage, right? It's not in volume terms. So you can see there's some imbalances: 1 against 12, 8 against 40. Those are buying imbalances. 2 against 17, 0 against 41. Right, you can see 3 against 12, 7 against 41, 0 against 14, 10 against 54. Now again, you could adjust what imbalance you want to look at. Like say you want to look at 5 to 1, say you want to look at 10 to 1. You can do that, okay? Now some people also like to filter out by size, just take imbalances, 4 to 1 with volume over 50. Personally, I just prefer to just look at the imbalances. I got eyes I can see. I don't need to have that filtered out. I just want to know where the imbalances are really quick. I can see the volume myself. Now, why is that important? It's because generally as markets are selling off, you're seeing mostly selling imbalances, okay? Right, as you can see here, this bar, 3 selling imbalances, this bar, 3 selling imbalances, this one's got 5 selling imbalances. Then as you hit the low here, you got 3 selling imbalances, but then the market starts coming back with what? Buying imbalances, 3 here, 2 here, 2 here. So you all of a sudden, what was aggressive selling on the way down, now you're starting to see aggressive buying as the market goes back up, right? So once you understand delta, point of control, and imbalances, then you could start to use that information to understand what is actually happening in the market rather than just following price, up or down, right? Because now you could understand, okay, here, people like to follow price action. You come down, you hit a low, you got a green candle. Okay, well, what do you got? Well, you still got negative delta, so you got still overall selling in this bar. Well, you do have a couple buying imbalances. Okay, that's bullish. Point of control is still lower than the previous points of control, so volume is still migrating down. And what happens? You still go lower till you get to this new low, where all of a sudden now you've got positive delta. Okay, whereas earlier you didn't have positive delta. Now you got a couple buying imbalances like you did earlier, but point of control is also higher than the previous bar, right? And you also take out the high of the previous bar. So, if you're following order flow, you know that this is just, maybe a little bit of people covering their shorts. It's not a serious rally just yet, but when you get over here, you can see the aggressive buying in terms of delta, in terms of imbalances, and you see volume starting to migrate higher. Okay, so that's a much better bar to be getting long off of than this one here earlier. So how will order flow help your trading is it's going to keep you on the right side of the market, right? More importantly, alert you to when market conditions are changing, right? And that's important. It's because as a trader, you want to know, are market conditions changing? Have we gone from a bearish scenario to a bullish scenario, or vice versa, from bullish or from bearish to bullish? So, as a general rule, if you're long and you see bar after bar of positive delta coming in, you're probably pretty safe in staying long, right? If you're long and you see lots of buying imbalances happening, you're probably pretty safe staying long, okay? Now, if you're long and you see POC coming in higher and higher, you're probably safe staying in long. And the opposite would be true if you're short. If you're short, have a short position, and you see bar after bar of negative delta, it's pretty safe to stay short, right? If you're short and you see lots of selling imbalances appearing, you're probably pretty safe in staying short. And if you're long and you see point of control coming in, if you're short and you see point of control coming in lower and lower, every bar has got a lower point of control, you're probably safe in staying short. And again, just back to our chart, right? If you're short and you're seeing lower points of controls, if you're seeing negative deltas, if you're seeing selling imbalances, you're pretty safe in staying short. If you're getting long and all of a sudden you see positive deltas stringing together, you're seeing higher points of controls, you're seeing buying imbalances, it's safe to stay long. So, if you are short coming down in here and you see This is what I'm talking about, right? Where I say, order flow lets you see what's happening in the bar. Market's selling off here. Then all of a sudden you see these very weak delta numbers, right? Just 7, -7, -23, -7, 0, right? And 68. Well, for this market to keep going down, you're going to want to see nice, strong negative delta. You want to see strong, aggressive selling, but it's not there. It's very weak. It's 7, it's 23, it's 7, it's 0. And instead, you see it turn positive and quite strong positive, 115, 127. You're seeing the buying imbalances coming in. So if you're short from here, when you start running into this stretch in here where the deltas just get really weak in terms of close to 0, that the when I say weak, I mean the aggressive selling is lightening up, then start looking for signs of aggressive buying coming in and for the market to go back up. And then you see it right away. See the delta is very strong positive. You're seeing aggressive buying coming in here, and you're seeing points of control go higher. Okay, that's what I'm talking about. Keep you on the right side of the market, but more importantly, tell you when the market is turning. Now, why does that matter? Is because every trading book, right? Every trading guru says let your winners run and cut your losing trades early. But if you're just following price, everything looks the same, on the chart, because you can't see the intensity of the buying or selling that's incurred in the market right now, right? And that's what order flow does. It gets you as close to the market as possible. What's happening right now, right? You're not using a moving average or any sort of average, based on the last 20 bars, last 30 bars, last 50 bars. You're trading based on what's trading right now. It's the freshest information that's available to a trader. So the misconception a lot of traders have is thinking that cutting your losses short is about having tight stops. It's not, right? Having tight stops cause you to take a lot of unnecessary losses due to market movements, right? The way you cut your losses short is by knowing market conditions have changed and getting out, right? So again, if you're short here, now you're starting to see strong positive deltas come in. What do you think? Are you going to wait till it comes back up here and stops you out or break even? No, you can get out right now, right? If you're starting to see rising points of controls, if you're short and all of a sudden you start seeing points of controls zipping higher, what do you think's happening? Well, volume is migrating higher. That's not a good sign if you're short, right? Or if you're short and you start seeing buying imbalances appearing in the bars, well, that's another sign aggressive buyers are appearing. But when you see all three, it doesn't get any more obvious. And this was just this morning at 7 in the crude oil, right? You got that nice little sell off, the nice little rally there. So as a trader, right, you don't want to be fighting the tape, right? Because that's a fight you're going to lose consistently. And a lot of people like to fight the market, and there's no point in doing it because you're going to lose, right? You might win 1 or 2 times, but overall, the market's going to knock you out, essentially. All right, so find winning trades in the order flow, right? This is what everyone wants to know is, well, how can I use order flow to find those trades? Well, there's a lot of different setups. Personally, I've got about 50 setups, but when I say setups, it's more of nuances. I don't see them all day long. I mean, some of them, are I'll say rare, but when they happen, I know when to take them. But I'm going to talk about 2 simple ones, right? They're very underutilized, and not many people use them. And the beauty of these setups is they're easy to see when you look at the order flow. But if you're looking at a normal chart, you can't see them, okay? Because you need to be looking at imbalances or delta. Now, these are not overly complex. They're very simple that anybody can use them tomorrow as long as you have access to a footprint chart. And this is how you grow as a trader, right? You take what you learn from a presentation, on that I'm doing today or one of the other speakers is doing later, and you see how you could use that in your trading, right? And successful traders don't go out and they just don't go out and buy. Well, by successful traders, I mean people that make a living trading, and they don't go out and just buy some trading system off the shelf and use it like that. No, they learn a method of trading and they develop it to suit their style, right? And that's why I like doing these presentations, because I do get the emails once in a while saying, hey, I watched your presentation and I took what you're teaching there and modified it to my trading style and my strategy, and I'm doing really well. So that's why I really love doing these presentations. So the first one is multiple imbalances in a bar. Now remember, an imbalance occurs when there are more aggressive buyers than sellers in the two-way auction by a predetermined percentage, right? 4-to-1, 400%, meaning you have 4 times as many aggressive buyers than aggressive sellers, or vice versa. Now, at any price level, there may be a buying or selling imbalance, but what do you think it means when there are 3 or 4 or more imbalances in a bar, right? Well, the order flow is exhibiting strong directional trade. And what do I mean by that is, well, if you look at, this market is mostly going sideways, right? It's nothing happening. This is yesterday in the E-minis, right? We're just sort of drifting sideways. Obviously we got some news coming out later, but then boom, you see 1, 2, 3 selling imbalances. Well, that's important. Okay, it's important information, and you're not getting that off a normal bar chart. You're just seeing, well, it's a red bar, right? But what happens is, it's a quick drop from, 44, 44 and a half, 45, straight down to 42, 41 and a half. It's a quick 3-point scalp, not 3 ticks, 3 points, right? I know a lot of traders like to talk about their scalp trades. Oh, I made three ticks. Ticks. You want points, right? That's where monies are made, is in points, not ticks. But this market looked like it was going nowhere, dead in the water. Then the aggressive sellers appeared, so boom, you could take that trade, just a quick trade, last 5-10 minutes, 3 points. Again, this is yesterday. Also, E-minis a little bit prior to that. Again, we're just sort of hanging around here, right? Going sideways, up, down, up, down. But on this up bar, you see 3 buying imbalances. Okay, that's your sign, right? The order flow is speaking to you, so to speak, that, hey, aggressive buyers are present, even in the next bar, right? You also got 3 buying imbalances. And what happens, again, it's another 3-4 point move, in the next 5-7 minutes, okay? And, as a trader, imagine if you could get, 3 or 4 3-point moves a day in the E-minis, how that can transform your trading results, right? And even earlier in the day, this is when we were at just after the cash open, we're sort of trading up near that high. Well, the first time you got you got what, 4 or 5 selling imbalances in this bar. Okay, didn't work out, right? But if you're watching the order flow, okay, rather than getting stopped out up here, you're seeing rising point of control coming in here. You're seeing the positive delta. You're seeing buying imbalances, right? When you saw the aggressive selling, but instead now you're seeing aggressive buying. That could be your sign to get out. You hit that new high by a tick, and then boom, the aggressive selling comes back in. Strong negative deltas, starts selling off, goes sideways before it falls over. Okay, so there was some trades, some points to be had here. This one, even if you took the full stop out here, you could have made it back in the next trade, right? But ideally, you're watching the order flow, and you could recognize, well, you know what, I'm short, but I'm seeing a positive delta, positive delta, positive delta. Points of controls are all of a sudden going in the other direction. That's not a good sign. Instead, I'm seeing buying imbalances. That's what I talk about by how you could use the order flow to help your trading by seeing things that other traders aren't seeing in the market. Okay. Now, the thing with multiple imbalances is they could appear practically anywhere. Okay, but you should always trade in context of the market, right? You want to be looking for reasons to get short at highs of the day or swing highs, or in sideways markets, if you're about to break out of a sideways activity. And the same would be for if you're looking to get long, right? You can be looking to get long at swing lows or lows of the day, or if you're breaking out of sideways activity, just like here, we're at the highs of the day. Okay, I'm not trying to pick this to be the high of the day. I'm letting the market tell me, you know what, we're at the high of the day, aggressive sellers are coming in. And I know as a trader, if you're at highs and all of a sudden you start seeing aggressive traders, the market has a strong tendency to sell off. Now, in this case, the first one, the market came back up and made a new high by a tick before it fell over. Okay, that happens. That's trading. Here was a market going sideways, just about to break out. to the upside, the sign, multiple imbalances, right? Here was a market that was going sideways, right? About to break down. What was the sign? Multiple selling imbalances. So you can see how just a simple thing of imbalances can help your trading, right? It's going to help you understand that, hey, you know what, we're starting to break down. This is the thing that's giving the market the push, or that we're getting ready to start move up, right? But you want to look for that trigger, right? And the trigger in this case is the multiple buying imbalances, right? And then you see the market popped up. So again, multiple imbalances can appear practically anywhere, but you take them in context of the market. Selling imbalances at or near highs or sideways markets if we're about to break down, or if you're looking to get long, look for buying multiple bars with multiple buying imbalances near the low or the swing lows, or a market that's about to break out to the upside. Okay, so the second one I'll talk about today is the delta surge. Now remember, delta is the net difference between aggressive buyers and aggressive sellers in a bar. And generally, as the market goes up, there's positive delta. And as the market goes down, there's negative delta. Now, where it gets interesting is when you start analyzing delta over several bars. Okay, now, again, delta could be positive or negative or even zero in a bar. When it lands on zero in a bar, I've found it's just more coincidence than anything else. There's no special meaning, but I don't know. Maybe somebody will find 100,000 bars with zero delta and then tell me something different. But I found it's coincidence, because it could be the difference of one trade, right? It could be like a difference of one lot going positive or negative. But generally, as the market goes up, you're gonna have positive delta, and as the market goes down, you have negative delta. Now, a surge occurs when delta grows over several bars. So in other words, more and more and even more aggressive buyers come into the market. You're seeing buyers pile into the market. Okay, opposite would be true for a market that's selling off. You're going to see aggressive selling, then more aggressive selling, and even more aggressive selling coming into the market. It's like everybody's running for the exit, right? Oh, I gotta get out, So you see buying just getting stronger and stronger and stronger as the market starts selling off. Most of the time, trading is mixed, but the sequential increase in aggressive buying or aggressive selling is very telling to traders. Okay, now here's a few examples. All right, so what do we have here? Well, we've got this is E-minis from yesterday. Sorry, from this morning. This morning at 8 o'clock. A lot of people think that, oh, you can't trade the night session. Well, you can, right? With order flow, you can look at it. People say, oh, you get scared because it's such light volume, but actually, the volume in the E-minis is very good, right? For a trader, you can trade those markets using order flow quite nicely. But this is a market that's going sideways this morning, right? Then it drops. It drops from 05 or 04 down to down to 90, down to 00, down to 98. I mean, you get this big push down. But what was the sign, right? It just looks like it's just going sideways, right? Points of controls all sort of lined up. Nothing special in the imbalances. But if you're looking at the delta, right, this was sort of the clue, right? It went from positive, then it's negative 12, negative 33, negative 48. So it's telling you there's just a little bit more selling going on in each bar. And I know that as a trader, when I worked for the big trading firms, when you have a big order, you got to piece it in, right? You just don't go in and whack the market 10 points. You sell some, see if the market takes it. Okay, they take it, sell some more. Okay, they take that, sell some more. All right, so that's where the delta surge alerts you to what's happening in the market. Okay, and again, that was 4 in the morning this morning. Okay, this is after midnight, right? After midnight last night. 12:15 Chicago time, right? You just see it's just, again, this market looks so dead. It's midnight. Who trades midnight? Well, a lot of people trade midnight. A lot of the big trading firms and funds, they have night desks, right? People, not just one person sitting there watching cable all night. No, you got a staff of 3-4 traders there following these markets, trading them. So you see here, it went, just mostly going nowhere. Then all of a sudden the buying increases 12, 51, 69. You also got multiple buying imbalances in here, 1, 2, 3. So you got two things going on. You got delta surge, delta increasing. I'm not going to talk about the points of control here, but that's also bullish. But the surge 12, 51, 69. So they're testing the water, got a little bit aggressive here, caused a stack buying imbalance. Buy some more. Okay, boom, they're done. Okay, and what happens? Market just moves nicely. And, this is at midnight, right? You're talking a move from 41 almost up to 43. It's not the biggest move, but it's midnight. So you can see these moves have some meaning to them even in the middle of the night. Here's another example. This was around 8 o'clock last night in the E-minis, right? Looks like the market's just going sideways, right? Boom, just drifting sideways between 46 and 47 and a half, but then the selling starts picking up. Minus 16, minus 16, minus 35, minus 67, even minus 72, minus 86. It just keeps growing here as the market's selling off. But right here was the sign, minus 16, minus 35, minus 67. You're getting short in here around the 46, 46 and a quarter level, and it just trades straight down to 43. Obviously, somebody is testing the waters. Okay, I could sell some, not really moving the market. Okay, I'm not really moving the market, I sell some more. Okay, and then other traders start picking up what's happening, that the market is starting to tick down. They start joining them, and the market starts winding its way down. Okay, so that's what you're going to look for in the order flow. Obviously, points of controls are also moving lower. So you could put these things together, right? I've talked about point of control, talked about imbalances, and I've talked about delta, right? And you can see how simple it is just by looking at the chart. Now, if this is the first time you're looking at a footprint chart, okay, spend some time with it, get to understand what these different things mean, what point of control means, what delta means, what imbalances mean, and you're going to be much better off as a trader, in my opinion. Now, a delta surge can appear anywhere, right? But ideally, you're going to look for them in sideways markets, especially. And the reason for that is because nobody's expecting any sudden movement. And if you're starting to see signs of aggressive buying or aggressive selling, and it's getting stronger in that direction, that's your cue as a trader to go with it, right? Just, it's like riding, it's like surfing, get on the wave and ride it for as long as you can. So hopefully by now you can see how powerful order flow analysis is, right? You don't need to overcomplicate your trading, right? I think as humans, we like to overcomplicate things. But if you just trade what's happening right in front of you, you're going to be much better off than trying to come up with all these strange calculations. I just showed you two simple setups, right? It doesn't involve any calculations, just involves looking at the screen, right? So if you found this helpful and you really like my order flows trader software, right, what I use in the presentation, I've got a special package for you to make your trading a lot easier. And what it includes is the order flows trader 3.0 for NinjaTrader 8. It doesn't run on Sierra charts or TradeStation. It's programmed for NinjaTrader 8 because the programmer that I had for it is a programmer for NinjaTrader 8, and that's the software that I've been using for trading futures for a long time. And it's a volume footprint chart with 17 pre-programmed order flow indicators. I didn't really talk about any of those indicators in here, but we have an indicator in there to help you see what's happening in the delta, find out when it's weakening, find out points of controls that act as support and resistance. Now we've added tools for value, looking at the value areas of bars and things like that. So it's a very, very robust footprint chart as opposed to a normal footprint chart, okay? And I say you get my chart template, but honestly, you don't need my chart template because when you install the software into NinjaTrader 8, it's already programmed for a Emini 1-minute chart, and you can just adjust it from there. And normally I sell it for $8.99, but you're not going to pay that today. But I realize that having order flow software is one thing. The next thing is knowing how to use it. So I don't just give you the software and send you on your way, say bye-bye. I provide a lot of further education on how to trade with order flow. And each week, I do a live group training session for my users. If you can't attend, you can watch the recording. And there's already well over 125 presentations in there. I don't expect you to all watch them all, but you can attend them live and ask your questions about order flow or the software, but I'm there, to answer your questions. And, there are other people out there that want to charge you like $200 a month for that. You get it for free. It's like you get my software. I want to provide a space for you to go each week that, you got questions, you can come find me. Now, I also give you access to my order flows trading course. And normally I sell this for $297. You're going to get access to it. It's a 20 lesson course. It's about 15 hours long, but it's a great course for learning the basics of order flow. And to take it to the next level, I give you access to my order flows inner circle video series. And honestly, the only way you can get this now is through this special offer. I don't offer it outright anymore, but when I did, it was for $497. And what's inside is there's 56 videos on advanced order flow tricks, tips, and forms of analysis. So if you start adding all that together, right, the software, $899, the training, $297, the inner circle video series, $497, the weekly group training, you're already looking at close to $1,700. But don't worry, it's the barrier to entry is much lower than that. And as a special for, because Investor X will keep inviting me back, I got an extra bonus, the order flow playbook, right? It's a little video course I did on order flow. There's 10 or 11 order flow trade setups in there. And this course normally sells for $297, but you're gonna get it for free today when you pick up the package. And you add all that up together, it comes out to almost $2,000, right? Which is a lot of money, right? But again, I'm not gonna ask that much for you. I believe in keeping the barrier to entry low. But this is what other people have been saying about the software, right? They've been saying, Mike, your order flows trader software is remarkably helpful because I can clearly see now what's happening in the market. For example, who's in control on a very specific time and who's getting weaker as well, right? And there's a lot of positive feedback out there. Now you got to remember, right? If you want to be successful in anything, well, you have to start. There's steps, right? You got to learn. You got to train yourself. You need instruction. You need practice, and that's why I created this package for you so that you can get all that. So if you're interested, just go to www.com orderflows/oft3.html, and it's just a one-time payment of $749, right? That's much less than if you were to buy all that stuff separately of almost $2,000. Now there's going to be no more monthly payments. I can't stand these vendors out there say, oh, we're going to charge you $199 a month, and then you go to cancel it and you can't cancel it. You even got to cancel your credit card, and then you're still getting charged for it, right? It's crazy like that. I don't believe in that. It's just a one-time payment, and you get access to upgrades in the future and all that. Now you will obviously have to pay for data fees. Your data stream from a data source or from your broker. And you got to pay whatever NinjaTrader fees if you're trading through NinjaTrader. But my software will work on the free version if you want to use NinjaTrader as just a charting platform. So if you go to www.com oft3, I put it in the chat already, .html, it takes you to this page. Just scroll down, scroll down the side, takes you to this button. Just click that button right there. Takes you to PayPal. PayPal processes your payment. I don't get your credit card information, I don't want it. And then, within a short period, I will send you all your login information, your download details. It takes a little while for PayPal to process the information and get everything sent to me. So if you're interested, just go to www.orderflows.com/oft3.html. So if you're interested in my book, you can get it by going to this URL here, www.orderflows.com/book.html. You'll need to enter your name and email address and click submit, okay? That will take you to the download page where you can download it. You're not gonna get the hard copy, you'll just get a download. So act now, go to orderflows.com/oft3.html. It's all in the chat already. And thank you, Anna, for having
so much for inviting me here today. It's really a pleasure to speak for InvestorExpos. And today I'm going to put on my coaching hat. My mentoring hat as well, but mainly my coaching hat, because what I find is that traders are getting bombarded with strategies left and right. I have my own strategy as well. And they just don't know where to turn. And it's more than just this trading the strategy. It's dealing with the emotions while trading the strategy. It's feeling confident in the strategy. It's feeling confident in yourself as a trader to know that your strategy is worth trading, and that if you continue following the rules, you will be successful. So what I'm going to talk to you about are the top trading habits, and then at the end I'm going to offer you a way to work with me one-on-one so that we can delve into the strategy that you're using and optimize it for you. So let's get started. This presentation is based on my book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. And in that book, we discuss 10 habits. So these are the 10 habits if you want to take a screenshot, but we're just going to do a little exercise to define your goals right now. And then we're going to focus on habits 5, 6, and 7. Understand and exploit your unique trading personality, follow a system, plan the trade, and trade the plan. So this is the exercise that we're going to do together. Pretend it's January 2022, 6 months from now. Looking back over the last 6 months, what has to have happened for you to feel you are achieving your full potential as a trader or investor? Now, it can be lots of things for you. You might already have a strategy, so it can be making that strategy work, making X dollars a month, being in a position to trade X dollars in your account. It can be finding the education that can catapult you to your next level, finding the trading strategy that resonates with your trading personality. It can be any of the above, all of the above. So please write it down. And if you'd like, you can email it to me at jody@fxtradersedge.com, and I will respond back to you. So you can take a screenshot of this as well. The market pendulum, the trader's pendulum. Let's just talk quickly, briefly about the 3 pendulums. The market pendulum, financial pendulum, and emotional pendulum. The market pendulum is about how to trade the market cycles, and we're going to touch on that shortly, because the market moves up in trend if we are in an uptrend, and then it corrects. And the corrections can be any number of corrections. I am an Elliott wave specialist, so the typical corrections are either sideways or steep, and most people use Fibonacci to determine, to look at the size of the correction. But what's important to know about the market pendulum is that there's nothing that you can do about the swings. You just need to learn how to ride the swings. And that's the most important thing. So not to buy when the market is exhausted, and not to sell when the market is correcting. The emotional pendulum feeds into that, because we get very emotional at market tops and market bottoms. So we want to have a way to control our emotions. And one of the best ways that I know, one of the best tools aside from meditation and working on our belief system, is to have a trade plan. And we will touch more on that. The financial pendulum is really important to understand. Successful traders have losing trades, and you will too. And what's important is that you really have the confidence in your trading system and the way you approach the market, and that you understand how successful your system is, so that when you lose, you don't lose big, but you're comfortable with your losses, and you're not constrained after you have a losing trade not to take another trade. So you want to be free to accept your losses to move on to find the next trade. So that's the financial pendulum. We are going to take losses as traders, but hopefully our wins are greater than our losses, and we have and we're profitable as traders. Now, some of the emotions that kick in when we're trading, fear versus greed is probably the coverall, the overall. Fear versus greed. when we're at one end of the pendulum, we're in fear. We might be fearful of pulling the trigger. Maybe we had a few losing trades in a row. And when we're at the opposite end with greed, maybe we've had a few winning trades in a row and we've bet the ranch. We've taken a really large position and then we lose on that. So all of our hard-earned money is gone in one trade. So that's the fear versus greed. We want to be able to stay balanced on the fear and greed continuum, because that also helps us to be balanced on the self-doubting versus overconfident. Overconfidence, if we're self-doubting, we're not going to take a trade. If we're overconfident, we might overtrade. And cautious versus reckless trading falls below that. Another combination is organized versus disorganized. When I meet with my coaching clients, the first that most traders say, I'm not organized in my trading. So I tell them to fill out a calendar at the beginning of the week as to when their trading hours are going to be. And some traders overtrade and they just trade all day long. So I want them to watch that and to focus on really what they've written down at the beginning of the week. Flexible versus stubborn, calm versus nervous. These are all feelings that you'll experience as a trader. So here we have Farrah and Fred, our technical junkies in the technical traders trap. They're out of shape with no business plan, not making money consistently. They lack discipline. They trade emotionally. They have no trading plan. And what's really consistent with them is that they hop from one strategy to another. They sign up. They pay for lots of different services, and they get nowhere. Because really, the secret is there is no holy grail in a trading system. The secret is in how you trade that system and how you manage your emotions. So this is Farrah and Fred, but meet Steve and Stacy, are transformed entrepreneurial traders. And these are characters out of my book, but they're in shape. They've done a business plan. They make money consistently because they trade with discipline, meaning they follow the 10 habits of successful traders. So they trade unemotionally for the most part. I mean, this is just, they just do things to keep them in balance emotionally. And yeah, they're not perfect. There is no perfect trader, no perfect trade, although some trades can be, when a trade works out as expected, that can seem like a perfect trade. And they have a clear trading plan. So in short, they're in shape with their trading business. And I just want to start off with some trading tips that Steve and Stacy have. And what works for them is being organized can help take your trading to the next level. Do you have a checklist for high probability trades? So when you're looking at the market, whether you're a day trader or a swing trader or a position taker, do you have a checklist to see if the trade is ready to take? And once in a trade, do you manage it well? Managing a trade is really key, one of the major keys to success. If you let your trade run, then even if you have a 50-50 win-loss ratio, you'll make money if you let your trade run and you manage it well. Do you take losses and move on, or do you add to losing positions? If you're doing that, you know, kind of try to stop that, because that's not going to help your bottom line. Do you keep track of your trades, or are you in denial of your trades? Many traders, because it can be a lonely business unless you're part of a community, don't keep track of their trades. If that's you, that's fine. Start today. Don't look back. It doesn't help to look back. Do you learn from your mistakes, or do you do the same things over and over again, expecting different results? Isn't that called insanity? A few more comments. If you subscribe to newsletters with stock recommendations or get Forex trading signals, learn how to analyze the charts yourself and then decide which recommendations to take. That's right. There's nothing wrong with getting recommendations, especially if you trade stocks, because there is a huge universe of stock symbols out there. And how do you know even where to begin, which sectors to be in? Do you know about sector rotation? Do you have maybe scanners to help you scan for trades? So there's nothing wrong with taking recommendations, as long as you don't just blindly take the trade and you analyze it yourself. You can set your price targets using Fibonacci ratios and understand where to get in and where to get out. You can take the trend trades, because those are really good trades to take, and avoid sideways markets unless you're looking to enter with the trend on the sideways market. And trading momentum versus long-term or swing with wider targets depends on your personality and risk tolerance. Also time. We'll cover that in more detail. And finally, understand that markets move in cycles and trade the cycles. So I'm going to touch on all these points that we've mentioned here. But just know that if you are a new or an experienced trader, on the left side of the quadrant in the technical trader's trap, like Farrah and Fred, jumping from strategy to strategy, you might be unsuccessful, but it's very easy to move to the right to become a transformed trader by developing some habits that serve you well. And let's discuss some of those habits now. Now, habit number 5, understand and exploit your unique trading personality. What trading style do you prefer? A lot of traders say to me, well, how should I trade? Should I day trade? Should I momentum trade? Should I swing trade? Should I take positions? And I say to them, well, it's really a function of what your time allows. And it's also a function of your personality. So if you enjoy sitting in front of the screen and you have the time, you don't like to take positions home at night, and you like to take small profits and just call it a day and meet your target that way, then you're considered a short-term momentum or day trader. If you like to take your time analyzing the markets and you don't really want to be in front of the screen all day long, you can find your spots, take your positions, and then put in your stop loss and your profit targets. You can even get alerted on your phone. Most of the trading platforms have that capability where you can get alerted at your profit target, and then you can come back. In fact, if you're trading on the 4-hour time frame, you can even get alerted at the end. You can come back at the end of every 4-hour candle, because that's when the new candle starts. So you can check your position every 4 hours, for example. A long-term position trader is probably prepared to hold their positions for quite a while, and they will endure the swings up and down. And in the end, the results can be the same, because short-term momentum or day are making daily profits. If you add those up over the course of a month, you might make the same amount as a swing trader or a long-term position taker. It's just the amount of time that you spend and whether you lock in your profits quickly or you let them go on. That's really the difference. But you're going to want to monitor your positions like every day. You're going to want to look at your trades every day if you're a short-term momentum or day trader, so that you don't fall into, well, I traded this, I lost some money, let's move on to tomorrow. No, you want to look at your trades and see if you made some mistakes. It's very easy to, even at the end of the day, to say, I had one client say to me, I took about 6 trades today and I feel like it was just an awful day. And I said, well, let's see your trades. So we looked through all the trades, and in fact, he had an excellent day. Looking at his weekly profit target, he made more than a third. He made 40% of the profits that day that he wanted to make in a week. So sometimes our perception can be skewed, and that's why we need to really have a serious look at our trades so that we don't skew our perceptions about what we're doing. We're only human after all. Also, some traders are discretionary and others are systematic/mechanical. And then still others have automated trading strategies, and that falls into the institutional category, although there are lots of retail traders now that are also automating their trading. I'm starting to do that as well, especially automating the scanning of the trades, finding stocks to trade, finding instruments to trade based on my particular setup. So you can semi-automate, you can fully automate. that's where we're headed with technology anyway. But it's really important, whether you automate or not, to start with a discretionary trading system so that you understand what's behind it. Because if you don't understand what's behind it, then you're really trading a black box system. Habit number 6, follow a system. So we just discussed that discretionary and systematic traders have systems. If you look at a company like winning companies like Amazon, Microsoft, they all have winning formulas and systems, and they execute that formula or system consistently. So it's really important for you to develop your own game plan or system for your trading style and temperament, and be comfortable with it, because if you're comfortable with it, then you will develop the confidence in yourself to follow it. And one of the tips that I give my coaching clients is to back test your strategy. So back test your strategy means going through historical data but moving forward with it and seeing how you would approach the market based on your strategy, and actually take trades as you go along, so that you can then look at your strategy and see if it's working or not. But more importantly, see if you're trading it well, if you're working with it well. Because a strategy, if you give the same strategy to 10 traders, all 10 traders will trade it differently, because we're all different, we're all unique. That's why it's important for you to trade it to see how well you trade that strategy. And the best way to do that is to back test first before you trade demo or live. And then you'll develop the confidence in yourself to follow it. And you might find that you're trading it really, really well, and that you can start trading live at that point. So usually what traders do is they set up their charts. You might use some indicators, you might not, you might use the price action. It really depends on what you decide to do and what strategy you decide to embrace. What's important is that you know the time zone that you're in and know the times that you're going to be trading. You have your calendar, you know which markets you're going to be watching, and you know which time frames you're going to be trading. A lot of traders get confused by the time frames. Like, what time frame should I trade? Well, that really depends, again, if you're a day trader, a swing trader, or a position taker. The position taker would look at the higher time frames. I like looking at 3 different time frames. So as a day trader, that could be the 1 minute, the 5 minute, and the 15 minute, for example. But it's always good to get the look at the bigger time frame to see what the trend is on a higher time frame. And then you might have your general rules. This is a set of rules that hold true all the time, and it reminds you to stick to your plan. You might write out a list of 5 or 10 rules that you read before each trading system. I'm not going to chase trade. I don't chase trades. I wait for the retracements. I follow my strategy. I stick to my trade plan, things like that. And you might even say, I'm a successful trader. So that gets more into the psychology of it. I don't go between fear and greed. I focus myself on the fulcrum between fear and greed. These are just examples. And then you're going to need to understand for your trading strategy the entry and exit rules. What triggers the buy and sell decisions? How do you decide to buy? How do you decide to sell? What needs to happen? And that's part of your checklist. Your exits include your stop losses and your targets. So don't be afraid of including a stop loss. Make it wide enough so that you know that you're wrong if it goes through your level. There's always going to be another trade, and it's more important to take a loss early than to hold a losing position for a long time. And I'll show you why in just a minute. This is the market map that I use for the analysis. So I have a three-part system, doing the analysis first, figuring out where we are, and then figuring out what my strategy is saying. So this is the 8-wave market cycle. I'm just teaching a little bit about market cycles now. And when the market moves up in a trend, in an L8 wave cycle, a 5-wave L8 wave cycle, or an extended L8 wave cycle, we typically move up within channel lines. So you can literally draw channel lines around the price action. And then when we break down, that typically means that we are going to correct this entire sequence in a 3-wave move. And it's the same for a downtrend. We move down in 5 waves and then we correct in 3 waves. Now, you recognize Warren Buffett here. One of his quotes is, "Be fearful when others are greedy, be greedy when others are fearful." And what that means is, if we are moving up in a trend, traders get FOMO, fear of missing out. They don't want to miss out. So they tend to load up at the top when the market is very optimistic and exuberant. This is when they load up. Well, this is when Warren Buffett would be selling at point T. He's not going to be loading up here. He will be loading up down here when traders are fearful and they're bailing and they're experiencing panic and discouragement. So this is not an easy thing to do. It really requires training the brain to not buy up here and to not sell down here. We've seen this correction happen numerous times in the last several months, especially in the stock market. And this is really what happens. Traders get exuberant up here and the masses pile in. And then this is what happens. The market moves down and the market trades back up again. They get exuberant again. Okay, now the market is going to make a new high. And then what happens? The market comes down. And this is a very, very painful, this ABC, the C wave can be very, very painful. And it was very, very painful this year when we had this, we had like when you have an ABC correction, very, very painful. So we want to train the brain not to be greedy up here and not to be fearful down here. And really all that means is make sure you get out once the market turns around. There's nothing wrong with buying it during the wave 5, as long as you have your out when the market starts to move down, and then you sit out of it. It's like what happened with Bitcoin and Ethereum and all the cryptos. How the market was so exuberant when Bitcoin shot up. Well, you know what happens, how that story ends. So this is an example of trending versus sideways markets. The red line is the bigger time frames. This is what I mean by looking at 3 different time frames. This red line can be the daily, let's say, the blue can be the 4-hour, and the green dotted can be the 1-hour. What happens is the daily might be bullish, and then the hourly might cycle up and down around the bullish trend. So when you're looking at an hourly chart, you might only see this piece of it. So then if the daily is bullish, you're going to be wanting to buy the dips on the hourly chart. And this can be the 1 minute, the 5 minute, the 15 minute as well. It doesn't really matter. And this is the 4 hours. So you're going to have you're going to have less dips than you have on the hourly chart. The smaller the time frame you're on, the more dips you're going to have. So an uptrend is higher highs and higher lows. We know that. If the long-term trend is up, the medium-term and short-term trends will cycle through the trends and corrections, giving multiple buy signals along the way. This is an example of using moving averages. The hourly chart highlights the moving averages that capture the broad trends in this market. When the moving averages are pointed up and separating, the uptrend is in full force and the trader can buy the dips. When the moving averages are twisted and sideways, like in this box, the market is in a sideways consolidation phase, and it is best to wait for the trend continuation, i.e. a breakout, before buying in an uptrend or selling in a downtrend. Or you can certainly buy at the bottom end as well. That's up to you. But this is really how all trading trends and corrections look like. Just talk a little bit about following a system. Here's a little strategy to find the end of the trend, just with price action and one oscillator. When you see divergence, that usually means that the trend is running out of steam. Sometimes you can have double and triple divergence, but this is what divergence is, where price makes a lower low and the oscillator makes a higher low. It's the greater than sign at market bottoms. You draw your trend line or your channel around the downtrend, and then when you have that trend line break, that's your signal that maybe trend is turning around. And then the market moves up. This is a 1, 2, 3 reversal, comes back down again. And at this juncture, we can either make a new low. The market is at point 3, the market is at a crossroads, and price can either make a new low or confirm a change in trend once price takes out point 2. So this is market behavior, and it's really important to understand market behavior. And as a trader, you can buy over here. You can buy when it takes out point 2. This would be the confirmation level, and your stop would be below point 1 or point 3. Little strategy for the end of the trend. What is the difference between a trading system, trading strategy, and a trade plan? You've heard me mention all of these terms. Well, a trading system is a collection of trading strategies. So you might have a trend trading strategy, you might have a sideways trading strategy, you might be trading options and have different strategies there. And the trading strategy is a specific strategy based on what you're trying to do. It's entries and exits based on the price action, the analysis techniques, and or the chart setup with indicators, whatever it is. So that when we have the trading strategy, it can be a checklist, knowing exactly what we're going to look for on the chart. And once you understand that the charts are really patterns of market behavior and the psychology of traders, psychology of investors, and you begin to internalize those patterns, you will be able to see your strategy working very well with the chart data that you're looking at. But it takes time to recognize the patterns and to internalize those patterns to become familiar enough with your strategies so that you become really confident in the market price action. And then the trade plan is a set of rules for when a trading opportunity arises. So what that means is I'm going to buy here, I'm going to trigger the trade here, I'm going to take my profits here, and I'm going to exit, set my stop loss. And well, taking profits is part of the exit strategy. Trade management is also part of that, and I'm going to show you a trade management strategy shortly. Habit number 7, plan the trade and trade the plan. The path to greatness lies not only in our performance, but in the systematic practice we put into it. And trading mastery is about internalizing the patterns that I spoke about, rehearsing the execution skills. You can do that with back testing. Learn from the market feedback. The market gives us a lot of feedback. Some of the feedback we welcome, some we don't welcome too well, and make sure we prepare the trade plan. So I developed a trading blotter a long time ago, but I'm going to show you here to show you what I think are the different steps in a trading day. One being the analysis that we would take as traders, the next being the checklist and looking for high probability trades, coming up with the trade plan, and then the post-market review. So here it is. You can take a screenshot of this and you could set up your own. You can put whatever you want up here for the analysis. The important thing is that we educate ourselves in the global markets. We are in a global market now, so what happens in one market typically affects what happens in the other asset classes. So we do want to become familiar with that. And how do you become familiar with that? Just read an article once a week, a strategy article. And then just start to absorb it, start to understand it. I mean, pure technicians will argue that they don't need to understand the fundamentals. I also trade technically, but I need to understand the fundamentals. The next is the trading checklist. This is all about your strategy. So writing down your trading strategy and when you would go long, when you would go short. And then you put it into a trade plan. Whether you're long or short, what your position size is, what your price is, and then your exit strategy is, and the entry strategy is triggering the trade. The exit strategy is your selecting your stop loss and your profit levels. At the end of the day, we want to do a post-trading analysis, or at the end of the week if we're a swing trader, or at the end of the month even if we're a long-term position trader. And we just want to check this off so that we can check off our feelings before trading, our actual trade planning, and our actual trade results. We want to know if we revenge traded today. We want to know if we were calm, cool, and collected, and we traded our trade plan. We want to know how well we do with our trading strategy. So take a screenshot of this and have a look yourself. Let's talk briefly about trade management. There are 4 different strategies that go from simple to more complex. Which strategy to choose is a function of a trader's experience. So getting in and out all at once, that's typically what new traders do. Number 2 is get in all at once and take profits at various levels. That's the strategy that I'm going to talk to you about. And the most complex is getting in and out at various levels. So adding to your position. Let's talk about number 2. I developed this trade management strategy called the 3 profiteers, getting in all at once and taking profits at various levels. This is good for maintaining balance on the fear and greed continuum that we spoke about, and it's perfect for perfectionists who want to capture every last pip in the move or every last dollar in the move in the case of stocks. I developed this for me as a little bit of a perfectionist. So how does it work? First, we determine the potential profit area. So assume the potential profit area is 100 pips, or in the case of stocks, $10 or even $100 on some of the higher price stocks. And then we use the Fibonacci sequence, the 8, 13, 21, 34. You're familiar with the Fibonacci sequence. And we pick 3 profit targets, the third ending at RPPA, and we work backwards. So from the 100 pip PPA with the Fibonacci sequence to determine our profit objectives. And that would be 34 pips, 55 pips, or 89 pips. And those would be our profit targets. In the case of stocks, it might be $3.40, $5.50, $8.90. You get the picture. Now, why is this perfect for perfectionists? Ha ha ha. It's so that if we do take a trade and we get out of our position, we don't get annoyed with ourselves when the market continues to move our way. So this enables us to take profits along the way, and we actually can hold that third position a little longer and increase the size of our wins because we are holding the position a little longer. So that's really how this works. And then we set our stop loss at the first profit target, which is 34 pips, and then we move the stop to break even once the first profit target is met. The risk reward is 1.74, and that's what it is. So let's look at just 2 quick examples. One is the euro, and let's just say that we are expecting price to move up into this area. So that's our PPA, okay, 55 pips, that's our PPA. So then we work backwards from using the Fibonacci sequence, and we set our profit targets at 55, 34, and 21 pips, which are at these levels. and we set our stop loss. And that's how it works. And in this case, we did get all of our profit targets, and we're out of the trade and we look for the next one. We don't look back. Here's a stock example, Microsoft. And let's say we are expecting price to move down into the wave. Whatever it is our analysis is telling us, we're expecting price to move down into the wave. So we have our PPA of $9.45 because this is our trade entry and this is our profit target. Take the difference, $9.45, using the 3 profit tiers and working backwards from the profit target. That's $8.90, $5.50, and $3.40. So we put that in our trading platform. And what happened? The market gaps down, our 3 profit targets are hit, and we're happy. We move on. Like we don't, we're happy. That's one trade done. And we're very happy. We got our 3 profit targets and we move on to the next trade. So we just learned 3 of the 10 habits of successful traders. Learning them will help you save time and effort, make more money, and achieve your full potential as a trader. And I want to remind you, if you're just coming in now, at the beginning, I asked you to write down, looking back over the next 6 months from now, if we were meeting, what has to happen for you to feel that you have achieved your full potential as a trader. And I encourage you to write that down either during or after this presentation and email me, Jody at fxtradersedge.com, Jody, and let me know what you've written, and I will respond to you because I love speaking to traders. Now I want to invite you, stock options, Forex, and futures traders, to join my FXTE Next Level coaching program to work with me one-on-one so that you can have your own personalized trading plan that you can follow with confidence. And this is the web page, fxtradersedge.com/next level coaching. Guess I can put it in the box here. Jody Samuels has been my coach for over a year and a half. It's actually been longer than that now. Working with her has truly been rewarding. She has a vast knowledge of the markets, combines that with extraordinary technical expertise, patience, creativity, and discipline. My investing skills have definitely been enhanced by this experience. And she is spot on with her assessment of the 10 habits to become a successful trader. Success takes work, but the outcome is well worth the journey. Thank you, Jeffrey, one of my very successful clients. So what is this next level coaching program all about? Work with me. I'm just going to post this in the box, the link. There we go. Work with me to create a blueprint for your trading business. That's what we're going to do together. We're going to assess your current strengths and weaknesses. We will assess your current situation and clarify your goals. We will develop a step-by-step plan to achieve your goals. That's a timeline. We will outline the strategies, tools, and timelines to achieve your goals. So we're talking about trading strategies, and we will discuss your capabilities to help you implement your goals blueprint, because again, every trader is different. We will start in this coaching program with a 60-minute starter question. That's where I get to ask you a lot of questions, and you get to talk about yourself and let me know what you've been doing in your trading business this whole time. We will complete this blueprint in a personalized 3-hour session, and it can be broken up into 1 or 2 sessions. Sometimes it takes longer than that. We're going to actually go through we're going to put a document together and really talk about your strategies that you're using, your habits, your organization skills. We're going to talk about it all. Your emotions, we're going to talk about it all. And then we're going to have 3 monthly follow-ups to check in on you. And of course, I'm going to give you assignments to do, and you're going to be trading live at that point, and we're going to see how you do with your strategy. You can send me unlimited emails. I'm going to give you a bonus, chapter 3 of my book, Becoming an Entrepreneurial Trader, the process. In short, we're going to be creating a business plan, a planning blueprint for your trading business. So really all you need to go to is fxtradersedge.com/next-level-coaching. Bob and I have been trading partners since 2015. We both read Jody's book. We had a very detailed planning session with Jody, which pinpointed areas which we hadn't even thought of yet. We both found her to be very intelligent, knowledgeable, and willing to understand our system and help us to make it more profitable. Her approach is a holistic approach, which encompasses both technical trading ideas and how to make trading fit into our overall life. Thank you, Bob and Kim. So this is the price. Remember, it's my time. All of this is mine. You don't go into a group coaching. You don't. I don't have you working with another coach. You're going to be working with me directly, one-on-one. And I only do this with. I don't do this with a lot of traders. It's $847, and that's. I'm told that that is really, really good value from the current coaching clients that I have. The case for a coach. According to the International Coaching Federation, the ICF, 86% of organizations saw an ROI on their coaching engagements, and 96% of those who had an executive coach said they would repeat the process again. Behind these results were tangible as well as intangible factors. Tangible factors were areas such as increased productivity, higher levels of overall employee performance, and higher engagement. Intangible factors were increased confidence of those being coached. And that's what I want you to focus on, the increased confidence. You will develop increased confidence in how you're doing things. And the day came when the risk it took to remain tight inside the bud was more painful than the risk it took to blossom. So really, it's my hope for you as your trading coach that you blossom as traders with your trading strategy, that you have total clarity of how you're going to meet your goals, and that I help you on your trading journey. So again, FXTE Next Level Coaching Program, I've posted the link in the box. And if you have any questions, please contact me, Jody at fxtradersedge.com. I really, really appreciate you being here. Good luck to all in your trading businesses, and I look forward to seeing you one-on-one. I can only accept a limited number of clients, so if you're interested in this, please sign up as soon as you can. Thank you very much, Anna.
Hi, everybody. How's everybody doing today? I would love to know where you guys are from. So first of all, thank you for being here. I don't know where you guys are, but right now I'm visiting New York, and it's been, oh my God, it's been over 100 degrees in some days, and I'm not used to that. I live in Guatemala. We never get over 80 degrees pretty much where I live, and that's considered a hot day. How about you guys? Where are you guys from? Because I see quite a lot of people are here. So I'd love to know where you guys are from. North Carolina, Southern California. How are you guys doing in Southern California? Because I know that this is around the same time of wildfires, right? Northeast Pennsylvania. So I don't see the names there. I see just Trader. Yeah, you guys are pretty much having the same as me. Paul, you're from India. How is the weather in India? Actually, I'll be honest with you, I don't really know your weather patterns. I know that some areas are crazy hot, some not so hot. So Phoenix, how is that? Is it a scorcher? I've been to Arizona, and oh my goodness, it's crazy. Oh, you have winter started, so you're doing good. Good. Oh, I know. I've been to Phoenix. Oh my God, I remember going to Arizona, and we were driving and it was like 125 degrees. And I remember a commercial coming on, and they were saying that some of the toupees on people's heads were getting melted. It was so ridiculously funny, even though it wasn't very funny. Scranton. Oh, we were just near Scranton. We were in the Poconos, GM. Okay, guys, I am so happy that you are all here today with me, and I am Marina, the Trader Chick. And today I want to talk about scalping futures and E-minis and why that it is a less stressful way to trade. And it doesn't have to be only futures. Scalping in general, personally to me, is a really fun way to trade. I don't know if any of you guys know what scalping is. If not, I'm going to just explain it really quickly. Basically, it's going for much smaller targets with a quick time frame. That's pretty much all that is, right? But the fact that it is super fast is really the key. Because you don't have to sit through massive long waits. You don't have to sit through everything. But as everything, it's not just going in and getting out automatically. It's having a very structured strategy. And if you have a good structured strategy, it is definitely golden. So I am Marina, the Trader Chick, and this is me right here with one of my little people. And I actually have a confession to make. I am a scalper. And the funny thing is that people believe scalping to be a little bit negative or not really sure what it is. And a lot of times it's amazing how many times people are scalpers without even realizing that that is something, it's a thing, right? So here's how I stumbled upon scalping. Again, like I said, a lot of us probably are doing it and don't realize it actually has a name. I'm finding that everything has a name today, right? And I had no idea I was actually scalping. But what happened to me was I was really struggling. I was in an academy that I just spent way too much money on, and I was just really, really struggling to keep up with it. They were going for these really romanticized, big, huge targets that look great on paper, but are really difficult to get. And to be honest with you, I was constantly failing. I was not doing well. I was losing way more than I was ever earning. I could not sit through the whole time to get into into getting the large target. And for me, it became really, really difficult, right? It became, can you guys hear me? Sorry, there's something just, I'm going the wrong way. So basically what happened was I couldn't sit through the long target holds anymore. And I just started to notice if I do a certain strategy and I follow a really specific way of understanding what the market is telling me and going for much smaller targets on a quicker time frame, I was actually starting to hit my targets. And it's not even about, the reality here, guys, is money is definitely the end game, but if you're making the wrong decisions over and over again, you're not going to get that money, right? You're not going to win in trading. And the other thing is, we all want these huge profits, but we don't understand that if you're in the live market and losing money consistently, I don't care if you keep on practicing, your confidence level is completely shot. And you all know when we have a low confidence level, it's really hard to continue doing something well. And trading already is such an emotional thing. And when you're constantly desperately trying to save the losses you've made in the live market, it becomes an emotional way of going about it, right? Can you guys hear me now? Okay, you're back on. Okay, cool. Sorry about that. I don't know what just happened. So that's kind of what happened with me, right? And without realizing that I was scalping, I was starting to go for these smaller profits and hitting them. I was hearing that ka-ching, and that was just starting to raise my confidence more and more. It didn't matter that it was only 50 bucks per ka-ching, but every time it was more and more, and my confidence started to grow. And that's what it was all about, because every big lesson you have usually starts with a pretty significant loss. Unfortunately, it doesn't even matter if it's in trading or anything. You have to go for a lesson to really understand what's going on. And for me, like I was saying, I was in this academy. I was sitting in this live chat room. Everybody around me was saying that they were taking trades, and I've been in it for a while, and I saw this trade that they said they were going to take, but I didn't understand why. But I started to chase it, and I ended up losing almost $4,000 literally in 5 minutes. It's devastating. I don't care how much more you go in the live market and try to practice and win it back. You are in an emotional state of mind, and guess what? I blew my account several times that month, and I didn't stop because I revenge traded. Revenge trading is another thing, and I can guarantee that most of us here have practiced it at one point or another, correct? So when you're revenge trading, what are you doing? You are an emotional trader. You're an emotional trader. Do you know what that means? It means you are not making valid, good decisions. So that's after my total loss and consistent loss. I actually had a breakdown. I literally had a breakdown. I was laying on the ground, completely defeated. I have lost way too much money in too short of a time period, and I was defeated. And when you are having a breakdown, there's usually two decisions that you have to come up with, right? One is quit, get out, never trade again, or whatever you're doing, stop it, or you have a breakthrough, right? That's the reason why we say there's a breakthrough after a breakdown. And gratefully for me, I had that breakthrough. And it's funny because I don't know if any of you guys have ever seen Nacho Libre. Me and my family are a huge fan of Nacho Libre. And if not, I really recommend it. It's a super cute, funny movie. And it's Nacho, this character right here. And what he wants to do is he wants to be a luchador, which is a Mexican. They have these Mexican lucha libres, they're called, right? They're wrestling. And he desperately wants to be a luchador, and he is terrible at it. And then there's this one scene in the movie where he's standing in a church and he's saying, "Dear Lord, why did you give me this strong desire to be a warrior and make me so stinky at it?" And I'm not even kidding. There have been so many times that I stood and asked the same question, why did you give me this desire to trade? And I feel so wrong doing it all the time. And that's kind of where my breakthrough came through. So I did quit. I did walk away from the charts for about 4 to 5 months entirely, but I was just desperate. I did not want to stay away. And the main reason why is because deep down inside, we all know, and I know for a fact that you guys are all here because you have that same desire, is you know that you can do this. You can do this. And one of the problems that I had when I was first learning was that every time I asked a basic question, like what is a divergence? What is a reversal pattern? Can you please explain that a little bit more? I was being treated as if I was supposed to be born with this information. And these are the basics. This isn't even anything that, you know, is really complex. But if you do not have the basics, it's literally like you cannot put in a window if you do not have your walls, right? It's just the way it goes. And it is the same for everything, and day trading especially. And that's when I realized I never learned the basics. So I ended up studying them for years. Literally, I became fluent in the language of the market. And if you're sitting here thinking, oh, there's no such thing, the market actually has its language. It speaks to us. It actually tells us what it is doing. And once you understand how to read it, and that happens from understanding the basics of it, I can guarantee you your trading will be completely taken to the next level. I know that for a fact. Okay, so that's how my scalping was born. When I finally started to really read the market, understand the basics, and understand where it's going, I started to recognize that if I put in, you know, for a certain target, it will hit it much quicker for a very small amount. I was going for 1 point, and my trades started to be 3 to 15 minutes. To be honest with you, today they're like 30 seconds to 3 minutes because the volatility has been so much better, especially during the pandemic. And the smaller profits I got, the quicker my confidence started to grow. And also, I couldn't sit through the stress of those big trades, and that alone saved me. And that's how I stumbled upon it. Okay, so just a really quick intro. Like I mentioned before, I am right now visiting New York. I'm visiting my family for the first time in 1.5 years since the pandemic began. I am actually an expat. We live in Antigua, Guatemala, and that's my family. And I speak 3 languages. I'm trilingual. And mainly the main reason I am bringing this up, not to be like, oh, look at me with 3 languages, but I realized one thing is that the market has its own language. And I think I recognize that because I am trilingual. I was born in the Soviet Union. I was a refugee to the United States when I was really young. So Russian is my mother tongue. However, I was raised in the US, so English is my main tongue, right? That's like my main language. However, I've been now living as an expat in Central America. We first lived in Costa Rica and now in Guatemala for almost 20 years at this point. So I speak Spanish fluently. However, Spanish I learned in my later years. And if any of you guys have learned a second language in your later years, not as a child it comes almost instantly. But in your later years, it's an entire process, right? You have to put everything through your head, translate it, get it out. You have to communicate, you have to practice. It's a massive process, right? However, if you apply yourself and commit to it, you wake up and one day you just speak the language. You just speak it. Like one day I woke up and I just spoke Spanish. No more translating or anything. I'm not 100% fluent, but I could say that I could certainly hold my own in any conversation and in a group, which is really the hardest part. And that's how I recognize that the market has its own language. Another quick thing is before I became a day trader, I was a fitness instructor and a travel writer. And the main reason I bring this up is because so many people are like, oh, but I don't have math skills. I don't have financial background. Neither do I. And to be honest with you, I believe that that could actually work against us. Because when you're coming in with a fresh mind, you could just really learn the art of day trading. And I believe it's an art. And this is my travel site. You can still find me here on Travel Experta, where I still write about all our travels, because travel for us, it's not a luxury, it's a necessity. And day trading helps you have that lifestyle, which keeps you going with it, and it's awesome. All right, so I want to talk today about the basics of day trading, because it could really apply to scalping and make your trading so much easier. Before I go anywhere, I have a worksheet that I did for you guys totally for free, and it is to follow along with this presentation. And as Anna mentioned earlier, she is going to have a replay for all of our presentations, so you could go over this on your own time. So go here right now, makingofadaytrader.com, makingofadaytrader.com. Okay, makingofadaytrader.com. Get the free worksheet, the entire presentation, totally free. Makingofadaytrader.com. So let's hop in. Before we go anywhere, you cannot be a Formula One driver in a minivan, right? It sounds absolutely absurd. You cannot be a professional day trader if you do not have a good, strong software. So you need a good software. If you have a good software, you do not need to buy any other softwares or indicators or algorithms. All of that is money for the company. It is not money for you. So as long as you have a good software, and there's many really good ones out there, good platforms that have all the universal indicators you need. I personally use one chart. This is my chart. 2 indicators. I use EMA lines and the MACDs. These are universal and they're fantastic and awesome. Okay. So let's begin with basics. Market movement and the trend. I know that we all understand logistically about the trends. We have the upward trend, we have the downward trend, but the sideways trend, that is literally where almost 90% of our money, our wins are usually lost, right? How come? Because this is an indecision area. You could call it the chop, indecision, exhaustion pattern, consolidation area, channeling. I don't care what name you give it. The point is, it's zero momentum. It's not really understanding where to go. And what happens is a lot of traders think that they could predict the market during these moments or try to beat it. And let me tell you something, it never will happen, okay? So why? Why is that? Because the market is going to do what the market is going to do. So this is a trend down. We have a flat consolidation that transitions into another trend, right? So if you're betting on it to continue to go down further, you're going to end up losing. But what if it doesn't go up and continues to consolidate even more? You have to wait for those confirmations. So uptrending is pretty simple, right? Each pivot is higher than the other pivot. We're moving on up. right? You could call it a bull market, market trending up, going along. These are all words, right? This is where you buy. What does that mean? You enter at a lower price point, getting out at a higher price point. Downtrend. Okay, if you guys are sitting here and thinking, well, I'll never do anything with a downtrend, well, then you're not really a trader. That's the bottom line. So you either start to learn how to do this, or you admit that you're not a trader and you're just an investor. Okay, because downtrending, shorting the market is probably more profitable for day traders than going long. What is the downtrend? Same thing. Each pivot is lower than the other pivot. We are shorting the market. What does that mean? We're entering at a higher price point, exiting at a lower price point, and we take the profit in between. This is a bear market, market trending down, market going down, whatever you want to call it. That's what it is, right? So consolidating areas and transition areas, I call these the trader's worst enemy. Why is that? Because this is where the majority of our money gets lost, right? When you are in this consolidation, this back and forth, this going nowhere, guess what? You're going to lose money because you don't know where the market is going to go, right? And why don't we know where the market is going to go? Because here's the deal, guys. I'm going to repeat it again. Trading is an emotional, mental activity. And when we are seeing this kind of action, or I call it more inaction happening, we start to tell ourselves nonsense stories, right? So there's two types of traders in the world. There is the trend is your friend type of a trader, meaning when you are heading up, when you're or down, it doesn't matter. It's all about the trend. And you see a consolidation, you start to lie to yourself saying, well, you know what? The market's been going up all day. I'm going to continue going long. I'm going to go up. Yeah, no, the market is consolidating. It doesn't have to do what you think you do, and you're going to end up losing. Or the other kind of person that's out there, and that is the contrarian trader. And I actually used to be the contrarian trader. And normally when I saw a strong trending market, I used to be like, the market is correcting, I'm going to go the opposite. In this case, I'm going to short the market because it's been going up all day. Now it's going to correct. Again, a total lie. Why? Because the market is not going to do what the market is going to do. And in this particular case, it's not doing a whole lot of stuff, right? It's totally flat. So what does this mean? It means that there are three positions that we traders have to do when we are working with the market. Number one, we have to know when to get into the market. Number two, we have to know when to get out of the market. And number three, and probably the more important one, is knowing when to stay out. Because knowing when to stay out is going to save you way more money than you could ever imagine. So understanding this and staying out is going to save you. However, many people, most traders, especially aspiring ones, think they could beat the market or predict the market, and they go into these horrible areas losing pretty much everything. And this is what they look like, right? They could be small, they could be large, it doesn't matter. So how do you spot these areas? How do you know when they're starting to happen? These areas are support and resistance. And what the market does, it respects areas. And we as traders have to respect them just the same. Okay, so what does that mean? It means we have to have them outlined. We have to be ready for them. And the only way to do that is by having them drawn out. So again, going back to the Formula One driver, do you know that Formula One driving, it is a known factor with the race drivers that 25% will either get hurt or worse, die. 25%, right? So when there's that kind of a probability, do you think they're going to just jump into their car and just take off without putting on any safety gear? No, they're not stupid. Right, they're going to have a safety belt on, they're going to have a fireproof uniform, their helmet. Yet for trading, we all know 95% will lose, yet we still enter the market with having no safety gear on, right? This is your safety gear. If you do not have your areas outlined, you are disrespecting the market and you are going to be caught up in these ugly areas. So let's talk about resistance area. What is it? It is literally the ceiling of the market. And it could be a very strong ceiling to completely transition the trend. Okay, this is a resistance area and it could continue on. And you need to know that, because if it happened at one point and it comes back and hits that same area and you don't have it drawn out and you get stopped out, it's because you did not put on your safety gear, right? So you need to have these drawn out. Every single platform has a drawing tool. I don't care if it's a line, I don't care if it's a rectangle. It does not have to be fancy. It could be whatever, but it has to be there. What is a support area? It's the floor of the market. It's where the market hits the floor 3 or 4 more times. It's not a one-time hit. It's 3 or 4 times more. It has to show you that it's an actual area. Okay, support areas, it could stop the market or it could break through it, right? Support areas, you need to be aware of them. This is how you designate channeling. This is how you designate that chop, the indecision zone. Do you really want to be in this ugly ass behavior? Do you really want to be in a market that does not have any direction? Why would you do that? You know, you might as well just take your money and go and donate it to a good cause, because otherwise you're literally just donating just like that to the market, and the market has enough money. It doesn't need your money. Hold on to it. So how do we start to recognize when these areas happen? Again, guys, this is all 100% free. This is all 100% free on your platforms. Reversal areas and divergences. Once you know how to read these, and I cannot even tell you how many people that I have, that I work with, say, I cannot believe I just learned how to read this. It's the most basic thing, and yet it has saved me so much money. Reversal areas and divergences. I literally call these the trader's map to shift in directions. What are they? They are double tops, they are triple tops, they are head and shoulders. What is divergence? So like I mentioned before, I use 2 indicators. I use my EMA lines and I use MACDs. So if my EMA lines, my price action is telling me the market is headed up, and my MACDs are telling me, it's showing me that it's going in the opposite direction, it's screaming to me, Marina, stop. The market is slowing down. It doesn't have any strength. Wait until I give you more solid confirmation. And these are right there. These are so simple to spot. Double bottom. And when they're coupled together with divergence, it's 100% that the market is going to stop going or totally slow down. And you never want to be in a place where the market is a 50-50 toss-up, right? All right, guys, let's put all this together. Like I said before, everything I just went over and a lot more is in my free worksheet that I prepared for you, makingofadaytrader.com. Go there, get it right now. You can go over all this. Honestly, this is what I use for my cheat sheet for my own trading, makingofadaytrader.com. All right, so let's talk a little bit about the trades, how to apply this to trades. We have all heard of a breakout trade, right? I can guarantee you every single one of us have heard of a breakout trade who's sitting in this room right now, correct? Why? Because we all know that breakout trades are some of the most powerful trades that are out there, right? They are literally some of the most powerful trades that are out there. However, if you don't have your areas outlined, how are you going to know, right? So if you don't have a resistance area drawn in here, how are you going to know it just broke out? You can't be sitting there and be like, oh, I'll put a mental resistance area. Let's get real, guys. The mental areas are as crappy as mental stops. They do not work. They do nothing. Why are you not putting in your areas? And why are you putting in mental stops? Those will never work. That is literally how I lost all of my money several times when I was stupid. Okay? And pretending that mental stops or anything mental in a trading situation works. It doesn't. So start drawing in it. Start putting on your safety gear. Resistance area. If you're going to have a resistance area, then you're going to be looking for 2 things, either a breakout or a change in direction. So if you guys don't know what a breakout is, let me give it to you in layman's terms. Super, super easy, quick terms. Okay. You live here, south, and your girlfriend or boyfriend or whatever, best buddy calls you up and they're like, hey, come over for a barbecue. You have been to their house a gazillion times. You hop in your car, you're full of confidence, and you head north. You get on the highway, you know where you're going, but all of a sudden there's this huge construction site and a huge detour, and you have to get off the road and go right. You have to go east. So I don't know about you guys, but I freak out. Oh my gosh, what if they don't continue with the detour signs? Oh my God, Waze or Google Maps, whatever you use, hasn't updated yet. They're not showing the detour. What if I get lost? What if I run out of gas? I mean, there's all these what ifs. There's all these doubts, right? What is that? It's that indecision area. There's no real certainty in my head. If you gave me money and say you're going to continue to your friend's house, I'd be like, you know what? I honestly don't know. Because what if they say, you know what, the road is totally closed and you got to head home, right? Would you want to give money to somebody like that and bet on them continuing? Chances are not so much, right? But after a while, the road construction worker opens up the highway again and says, okay, you're back on the road, hop on, you're good to go. Guess what? You are hopping on and you are continuing north with total confidence. That is a breakout. You're continuing the same direction with a total confidence. Okay, you're living south. Oh no, detour. Uh-oh, I don't know what's going on. Oh, it opens up. Boom, you're headed up. Okay, that is a breakout trade, and that's how we spot it. All right, guys, so here it is. Breakout. Boom. I use my MACDs and my EMAs for the entries. Massive resistance area heading up. I have massive movement here, no divergence. Boom, I get into my trade. And we can use our areas and everything to show you for the same exact thing opposite, because when you're starting a new trend, when you're first hopping in that car and going, you're full of energy and confidence. It's the same thing here. So when you see resistance area and then a change with a lot of confirmation in your MACDs, boom, you could get into those instant reaction trades. So I just want to show you really fast how I put all this to my live market. So this is my my chart. This is my live chart right now in the live market. I trade the ES minis, which is the futures. It's the S&P 500 on the futures market. I personally use a 610 tick chart because I could see how many transactions right here. You can see a counter happening in real time per bar, showing me the volume. Right? If it's moving fast, that means there's a lot of volatility. If it's moving super slow, I know that the market is slow and it could be a lot more indecisive. So here is a pretty significant resistance area, right? We have 1, 2, 3, 4, 5, 6 hits, right? 6 hits. That is a significant area. So what am I looking for? Either for it to continue up, breakout, or a transition. And I'm sitting and waiting because the market is going to tell me what it's going to do. I do not have to predict it. And what is it telling me? Oh, look at that. Boom. Massive breakout trade. Boom. Right there. Right? And I know it because I've been following along. I'm understanding what the market is telling me. Okay, this is how I use the market. And here we go. This is a pretty significant, it's a pretty wide channel right here, and it lasted for a really long time, right? So I have to also understand the kind of channel it is. This is pretty wide, and it's wide enough for me to see that there's many trends in here. However, I also know if I am going to get into this trend, I have to know where it could possibly stop. And that's the important understanding of how to use these as well. And afterwards, I want to know where is that breakout trade or next transition trade going to happen again, right? If it breaks, oops, sorry about that. If it breaks through my support area or my resistance area, I am ready to take this on. So this is how I use my areas along with my EMAs and my MACDs. They all play together, and this is it. This is my entire chart. I use one chart. So if you're going to hear people say you need 2 or 3 monitors, it's a lie. They obviously just want to, you know, stress themselves out. You do not need to do that whatsoever. Okay, guys? So remember, you do not need to have too many charts or too many indicators. You do not need to have bots and algorithms. You can do this all for yourself as long as you are understanding what the market is telling you. And the reality is, guys, you have everything you need to take action. Everything. But the real question really is, how do you know you're doing it right? How do you know you're doing it right? How do you know you're doing it right is the question. So this here is for beginners only or seasoned traders who have been trading for ages but still losing money. The thing is, most people ask me, what can I do to turn this around to be profitable consistently? And lacking full understanding of the basics usually is how it starts, and it's a reality. The reason why I say this is For instance, with a car, today you guys totally know what the basics of a car is, right? The majority of you can hop in that car and it's super automatic, right? You know where the steering wheel is, you know where the clutch is, you know where the gear shift is, you know where the windshield wipers are, you know where the horn is, you know where all of these things are, right? You know where the seatbelt is. However, if you've never heard of the seatbelt or understand where it is, will you be able to access it in a really high octane moment? No, because you've never seen it. It's a language. It's a basic. I know today you're like, well, of course I knew this. No, it's just enough. I have a really great opportunity right now. My oldest son is learning how to drive a car. And when he first sat down, he did not know 90% of these things. He knew where the seatbelt was, obviously, because he grew up with it, but he didn't know where the wipers were, where the clutch was, none of it. It was a new language for him. And the reality is with day trading, especially with academies or people that just like to watch on YouTube, you're never taught the basics, right? You're just thrown in. What I like to compare it to is a music student that wants to learn how to play the flute. And when they arrive to the academy to even learn how to hold the flute, they're thrown into the symphonic pit with all the pro musicians, and they have to learn, and it's almost impossible. And that's why so many people fail in trading, because that's how it is. So you need to have that, right? And you might be saying, well, I know the basics. You'll be surprised, right? I have spent over $20,000 on my own training and never actually gone through that. And yet I was struggling for years because of not having the basics understood. And I ended up quitting because I lost almost $4,000 in 5 minutes. And this was towards the end of losing so many more others. And I didn't quit because I remember telling you that we have the trading bug, right? We get bit by it and it never stops itching. Because why? Because deep down, we know that we can do this. So I decided to take it back to the basics. And I don't know if any of you guys have ever heard of Coach John Wooden. Interestingly enough, I never actually heard of him until way after he passed away. And one of my students says, you know, you are a lot like Coach John Wooden. I'm like, who is this guy? And he was a legend. He is literally the reason why UCLA is a legacy and legends for basketball. He won 10 NCAA championships, 88 competitions in a row. I mean, the stuff that he was doing, he worked with total superstars. I mean, he was the best of the best. Yet, every season when they came back, he started with the basics. What did he do? How to tie your shoelace, how to roll up your sock correctly, how to dribble. I know it sounds completely ludicrous, but let me tell you guys this. You can know the best. You could have the best throw in basketball, but if your shoe is untied and if you have a blister, you're out of the game. And you know that. And you're going to be sitting on the sidelines being, oh, I wish I could have just done this correctly. And that's what it is. He starts them off like that all the time. Now, I have this for you guys, special offer for only the participants. It is my introductory course, Bootcamp for Day Trading. Bootcamp for Day Trading. You can do it on any apparatus, on your iPhone, Android, pads, tablets, desktop, laptop. This is the next step. Either it's your very first step or your next step. This is the step. So what do you get in this course? You get understanding of simplifying day trading, 30-minute platform setup. If you guys don't have a platform yet, I will take care of all of that for you really fast, teaching you. It doesn't matter what platform you're on. They are all pretty similar in the setups, and you do not have to worry at all about that. Understanding and dissecting markets, telltale signs, magic telltale signs. Really understanding how to use reversal patterns, spotting the areas, market shifts, divergences, breakouts. If you don't know the breakout power of it, how are you ever going to use it? And how to avoid the fake out breakouts, the FOMOs. And these could really, really get your money because you don't know what it is. Plus, you will get unlimited access to the curriculum. All of this value is $1,600. All of this value is $1,600. So you get all of the framework, dissection of the trends, setting up your platform, understanding and respecting areas, the power of the breakout. And here's what some of my students say, and I have students from all over the world, so you do not have to worry if you are living in India, New Zealand, or the US. Everyone can use it. When I finished using Marina's bootcamp, the feedback of the homework was invaluable. It's invaluable, best money I ever spent. This course is amazing. I will fully immerse myself and need a backup. This course is great if you have zero experience in the area. Feels like I'm really catching on. And let me share something super important with you right now. What makes a really good athlete? It's coaching. Okay, why is it okay for athletes to get coaching, and for us, when we really want to master something, want to avoid that? You will get, on top of everything that I just showed you, one bonus for 1 entire month, unlimited access and mentorship coaching with me, one-on-one for an entire month. And on top of that, best for last, you'll get 30 days free in my live trade chat room, where it's me, not any moderators, it's all me. And you get all this value, $2,600, and I have a special price for you guys, only for today, and it's only for the participants, $97. So go here right now, bootcampfordaytrading.com, bootcampfordaytrading.com. You'll get everything I just said, including the mentorship, the one-on-one mentorship, 1 month in my live trade chat room, $97. Guys, that's less than a normal trade. Less than a normal trade, and you will come out way ahead of everybody else. Bootcampfordaytrading.com. Bootcampfordaytrading.com. Okay, guys, bootcampfordaytrading.com, everything there, and you get to work with me for free for an entire month, one-on-one. So you do not have to worry about, am I doing this right? How do you know you're doing it right? Well, you'll know because I'll be there to help you. And normally the course is $297. You're getting 66% off regular price. 66%, and it's only for participants. Nobody else is getting this offer. $97, $97. And you can actually start it for $59 if you want. But here's the thing, guys, all right? Because I am offering my one-on-one mentorship, I can only take 25 students to really give you my full attention and my full commitment. Okay, so I can only take 25 students. So here we are. This is where you guys are going to see when you go for bootcamp, bootcampfordaytrading.com. All right, bootcampfordaytrading.com. Everything I just said and so much more, and you're going to be working with me one-on-one. Bootcampfordaytrading.com. All right, guys, so let's go here together. And if you have any question, this is the time to ask me whatever you have. So let's go right now. And what I also do, and I'm going to show you again a little bit of here. So this is a really good example happening right here. Here is a resistance area forming, and resistance areas can move, right? The thing is, by the time it starts, I've already had my first trade taken, so I'm all good, right? So now we have a massive divergence. Look at what I said. It's going flat here, but look at this massive divergence and what is happening with the market. Totally slowing down, and it's starting to go through here, right? It's starting to totally change direction. It's showing me that it is changing direction. However, my MACDs, they're still right around the zero line. So what does that mean? It's showing that it doesn't have that much strength in going down just yet. So right now, I'm still in that indecision zone. However, it can totally head down. And once it starts to go down really strong, boom, I'm going to be sitting and ready to take my next trade. Okay. So here we are. You can see right here, it's forming, it's going down. I will now be getting set and ready because it has changed direction. And all of my trades, I take one tick away from my EMA bars. It's not, oh wait, there's a long bar, I'm going in. No, because that's crazy, right? Long bars, they end. So how do I go for it? What do? I look at my MACDs, the strength. I see that there has been a change here, that there's been massive divergence. There's massive strength here. And think of an archer. You guys know archery? Have you ever seen an archery competition? They all stand from a specific spot, right? They don't just go in and start shooting their arrows. They go in and so I am telling the market that this is where I am going to be waiting for my trade. What is that? That's called a limit order, right? An order waiting. You never, ever, as a pro trader, want to go in market. Do you guys know why? Have you guys ever heard of what slippage is? So when you go in market, you get slippage, right? If you're going for investing, not a problem. It doesn't matter if you don't get in at the exact price you're telling it to, right? Because you're not going for smaller profits, you're going in for a long term. But when you're day trading, you're in and out during the same day. So you want to make sure you get in on the price that you really want to go in, right? And usually if you go in with market, you lose money. For instance, in futures, if you put in market, you automatically lose $12.50 to $25. And if I'm only going for 1 point, which is $50, so I really want to cut myself automatically. So I'm already telling the market where I am entering. And this is something you need to understand, because I get so many people that just go in market and then they close the trade market. Again, if you close the trade market, you're going through the same slippage. And sometimes they end up with almost nothing at all. And you want to be the one in control of your trades. You want to tell the market exactly where and when you are getting in and when you are getting out. Remember the 3 positions that I mentioned. Know when to get in, know when to get out, and know when to stay out. All right. So if you guys have already your ins and outs, but are having complications of knowing when to stay out, that's because you're not reading those consolidation areas, those transition areas properly. And once you get it, and it's so simple, because it's all about simply putting in the areas, understanding when the reversal patterns happen, you can literally save over 90% of your losses. 90%. And I'm not exaggerating. Like, that is the truth. Okay. True story. That's how it goes. So again, if you guys have any questions, this is your time to ask me, but I am here to work with you so you don't ever have to watch YouTube videos and then try and do that strategy and wonder, am I doing it right? $97. For $97, you can have me working with you one-on-one, plus 30 days in my free live membership, 3 live trade room for 1 entire month. You can't go wrong. $97. It's less than an average trade, and the results will bring back so much more. So I look forward to you guys joining, and thank you so very much for being here. And I hope you enjoy your day and you're not too hot. I know in India you're just starting your winter, so it's probably perfect, right? It's like the fall. Okay, guys, have a super rest of your day, and I really look forward to working with you.
Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci method. In this webinar, we'll be teaching you how to trade with institutions on all instruments. But first, I would like to remind you, required disclaimer, every single thing you will see in this webinar is to empower you how to trade, how to invest with institutions. Nothing constitutes a financial advice. All testimonials from our students, hedge fund traders, I believe to be true, and no one had ever been paid for their testimonials. All software, all strategies provided as is, without any guarantees. And past performance never guarantees future results. Let's start. In this webinar, we will cover how to trade institutional crashes and rallies as playing out today in financial markets. And you will see multiple examples from day trading to position trading on future stocks, forex, in current and prior markets. You will see how Alpha Fibonacci traders trade institutional crashes and rallies globally in the last 11 years in more than 50 countries, and how you can start trading with institutions, exactly what playing out in current markets. Here's Alpha Fibonacci system now. Here's the power in front of you. We knew days in advance that this is a place you want to buy from. We discuss this with students every single morning. If I convert this chart right now to markets on July 2nd, this is what the chart looks like. You knew many days ahead that this is the place you will be excited to buy from. Because institutions keep buying the markets, you will never, ever short near this level. Here's the market on July 5th. You're a confident, intelligent human being who understands. Preparing for your trade is key to your success. This is preparation for ultimate institutional entry point. Because when day trading level correlates days in advance with institutional entry point, it's a beautiful thing. Here's a software from our trading room. All will be posted on our YouTube channel where you can see thousands of videos. Precise entry, precise stop, precise target. This is top day trading instrument in US S&P Emini future that show you if you're trading with institutions, with precise entry, with precise target, this is market open. Your trading day, less than 20 minutes. Price skyrockets 6 points and reverses from reversal zone. Intelligent trader riding Goldman train. Intelligent trader never ever shorts near institutional support. If you do, you need to obey bold pink level. This is the power of the software, all played out just in the last few hours. Right now, you have zero interest to buy. This is critical day trading resistance. I am converting this chart to 1 minute so you can see the precision. An identical system applies to all instruments, and you will continue witnessing all of this live. I've been teaching since 2011, proprietary alpha Fibonacci system I developed in 2008. I developed over 30 systems, multiple strategies. And it doesn't matter if you have $500 account. It doesn't matter if you are a complete beginner trader or if you're a hedge fund manager who is managing multi-million, multi-billion dollar account. I teach you identical strategy. Currently, I'm writing a book about my journey, about my incredible clients from Florida, New York, Colorado, Monte Carlo, London. You can listen to podcasts on our website. And that's what you will see in this webinar. How these traders trade as institutional traders do on all instruments. Sam put his daughter through Harvard trading my system. Richard quadrupled his retirement account. Emmanuel brought his wife to the course. William and Amy flying into California for another dinner. Victor in Switzerland trading Forex. Long term. When Wolfram invites me to a wedding, this is the reason I love what I do. And this is a very powerful reminder. How do you become top 1%? First of all, you absolutely must stop chasing cheap systems, cheap indicators. Institutions never, ever do that. You want to become top 1%, you must stop thinking and doing what majority does. You must focus on pure price only. And remember, institutions do not trade 1 minute chart. Institutions do not trade tick chart. Institutions moving millions and billions of dollars. So here's Alpha Fibonacci system on institutional chart. So when I work with JP Morgan traders, this is a chart we use. But let me show you how Alpha Fibonacci system identified this institutional reversal point many months in advance. This is S&P Mini Future in 2019. Reached historical institutional reversal zone. So if you're a day trader who has small account, you're monitoring for reversal, you are not buying this level. You understand the rules which identify institutional sell-off, and you know many months in advance where institutions will be buying the market at 2200 level. So when market crashing, what does the world know? Panic, horror, negativity on the news. Hedge fund traders, institutions excited about buying the bottom. But this is what day trading charts looked like during historical week of March 2020. If you had very small account, you never ever shorted near, you were buying the bottom with institutions. You started riding Goldman, JP Morgan, Morgan Stanley, BlackRock, Rock Power. You are brilliant, intelligent, top 1%. You are riding institutional train. This is a system during historical markets. This is a very powerful reminder. You want to trade with institutions only. Because while the country on a full lockdown, we're witnessing the biggest historical rally. So ask yourself a question. Have you been shorting the market because panic and negativity everywhere? Or have you been riding this bullish train? Every single day since price reached institutional support in 2020, we witnessed that institutions buying every single pullback. This is the power of the system. This is a chart you start with. Because when I attend the biggest hedge fund events in the world, what is the number one problem hedge fund managers and institutions have? Getting in and getting out of position. And this is the event on S&P Emini Future during historical crisis, and how with Alpha Fibonacci system you knew many months in advance where institutional buy point will be. You learned your lesson well. You done thinking as majority does. You are prepared for the next crisis. Because what do you see currently that's playing out? We're no longer the ultimate bottom, are we? We are at ultimate top. And many months in advance, we know where institutional sell-off will play out. Are you prepared for the next crash? Do you understand why this morning it's not an option to short? It's institutional support. It's day trading reversal zone. This is the market. And this is what played out in our trading room that you can enjoy on our YouTube channel if you miss the events of this morning. So if you are using pure price, which is what I was teaching in the class right before I came here, you can trade like Richard does. So when Richard came to me, he was a retired physical therapist in Texas. He's been struggling for years. He blew up multiple accounts. But as you can listen to Richard on our podcast channel, he started as intelligent trader would do. He doubled his demo with market replay, and when he started live, his account was only $3,600. In December 7th, 2020, January 2021, his account 11,500. February 2021, his account 18,000. April, his account 37,000. And as he says, he works only mornings. Listen to Richard's podcast because Richard trades as institutional trader does. Richard understands the power of institutional trading. And that's what system is based on. It is a system for all platforms or software for Ninja 8. System based on indicator-free price. Because if hedge fund traders do not chase indicators, do not chase cheap systems, why in the world do you? Price is all that matters. And when you apply proprietary alpha Fibonacci retracements, you will never, ever, ever need anything else. Shall we look on Bitcoin? Shall we see what played out? Because I keep receiving emails time and time again thanking me for the power of the system. Because with Alpha Fibonacci system, you knew many months in advance where Bitcoin would crash and burn from 60,000 level. So when Bitcoin crawling up to reversal zone, this is your key support, 44,000 level. So when Bitcoin crashing 60%, this is email I received from my incredible, brilliant students who are trading Bitcoin. It never gets sold, I promise. Emergency room doctor exited Bitcoin at 50, knowing quite well that buying Bitcoin at reversal zone not a smart thing to do. Ken, whose movie about his life he made and whose podcast you can listen on our podcast channel shares. He building his account all the way up to 1 million. And this is phenomenal, stunning effort. You see exact same system in front of you on S&P this morning, right now. Here is Bitcoin. Bitcoin stock in weakness from 65 to 29. Ouch. This is junk. Intelligent trader would never ever touch that. This is a brick wall, and you knew this many, many months ahead. This is the power of the system. You can trade on anything you choose, as you will see much more next. But S&P doing exact same thing in front of you right now. Bold green line is a problem on Bitcoin. Bold green line is a problem on S&P. This is your trading range for the last 3 hours. Nothing else is possible, only this. If you can trade one, you can trade them all. Know your trading range and understand what institutions trade. And when you trade with them and not against them, you will never, ever, ever need another system again. Institutional trend reversals, institutional trend inceptions are the core of the system. On future stocks, forex, mutual funds, ETFs, cryptocurrencies. But of course, if you would like to trade Nasdaq, of course you can. If you would like to trade Forex, of course you can. All of this keeps arriving from traders all over the world each and every day. So as Theo says, trading with those powerful institutional levels is going with the market flow of the smart money. And being able to draw these levels manually is taught in the course is winning battle before it is ever fought. So what would your day in position trading be like if you knew hours, days, weeks, months, and years in advance where institutional reversal points are, where institutional entry points are? Let's look on Tesla and let's see what institutions have done trading Tesla. This is Tesla now, identical level on Tesla. Identical trading ranges you see in the live markets on S&P. It's identical brick wall in front of you. But this is long-term investment positions. If I take you back on Tesla, let's go all the way to pick a month. Choice is yours. How about last summer? Exactly a year ago, July 2020. Here's Tesla with Alpha Fibonacci system. This is what I teach, how system identifies all key levels, all reversal zones months in advance. Institutions do not trade 1-minute chart. Institutions do not trade 5-minute chart. So if you're day trading stocks, you are buying Tesla at the bottom. Skip forward 3 months. October 2020. Crawl is on. You bought the Tesla at the bottom. You're not shorting Tesla. You're an intelligent, brilliant trader who is riding Goldman power. Here's Tesla in January 2021. We did not reach reversal zone yet. This is your last point of entry at critical support, but this is where you expect sell-off. Exact same thing as you saw on Bitcoin, correct? So here's Tesla finally selling off, finally crashing, doing exact same thing as Bitcoin has done. There is no surprise, all precise. My students are my dearest friends for life. This is Lifeline on Tesla. This is Tesla in the month of April. Intelligent trader understands Tesla is stock. This is Lifeline on Tesla. This level is out. Oops, here goes Tesla. All the rules in class. You cannot speculate and place random trades. This is precision of the system. Today, on July 8th, Tesla in exact same place. But it's exact same thing that S&P keeps doing in front of you right now at exact same level. You are never entering into alpha Fibonacci resistance, correct? You are not trigger happy cowboy. You're only interested in quality trades. Price is exactly the same on S&P. Any chart you choose to trade as it is on Tesla. So if I take you back to S&P hourly chart, here's exact same power on S&P. Let's convert this chart to July 1st. This is what S&P looked like, as you knew many days in advance, that this would be institutional buy point. July 2nd, July 3rd. Data. One moment. I'm sorry guys, data is acting out. Doing a little too much work on S&P this morning. Give me 1 second, please. We'll go back to S&P. I will reset the chart. I will take a brief 1-minute moment. So the Alpha Fibonacci trading system guides trader to trade markets only with institutions, a strategic, intelligent trader would do on all instruments. And this is exactly what played out in our trading room. This identical trade. This is identically exactly what students share in the trading room this morning. Because if you can trade one, you can trade them all. It never gets old, I promise. Choice is yours. Do you want today or position trade? And that's how traders trade pure price and alpha Fibonacci only, riding institutional power. It never gets old, I promise. To see what's possible if you make an effort. So if you do this, the skies are the limit. So please understand, if one thing you learn in this webinar, it is extremely clear. Stop chasing indicators. Stop chasing junky systems. Stop thinking about magic bullet. Magic bullet lies in pure price. Pure price is what markets are based on. So here's S&P. By mistake, I clicked June. We're looking at the months of July on current contract on S&P. So here's S&P on July 1st. Does everyone see? All of this from our trading room. All of this is what I just taught in class. Here's S&P on July 5th. Here's S&P on July 7th and 8th. This is a problem. This was spectacular. And again, if I convert this chart to 5, this is a market. So if you touched single short near this level, you have a lot to learn. A lot to learn. If you touch single long near this level, you have a lot to learn. Market is a stepping stone. This morning we're dealing with institutional support. It all starts with this chart. It never gets old. And you know this. Days, months, weeks in advance. That's it. This is a traders who trade anything they choose. Choice is yours. So if you would like to trade Apple, of course you can. Here's Apple in 2015 when Apple comes out with the worst earnings in 13 years. I present at the biggest hedge fund convention, and what do I say? This is key support on Apple. You cannot short. It doesn't matter how horrific the earnings are. If this support remains intact, this is the key. Despite horrific earnings, Apple doubles in value 2 years later. After the earnings, Apple reaches next level. After the following earnings, Apple reaches reversal zone, but you know this many months in advance. And when Apple's selling off from reversal zone, you know many months in advance where to buy Apple from, 140 level. And that's exactly what Apple had done for years and years and years. So if you want to trade Apple, of course you can. This is a stunning lesson. Trading on earnings does not work. Trading pure price with Alpha Fibonacci system does. Where's Apple this morning? Let's take a look, shall we, on Apple? Here's Apple. Skyrocketed, reaching crucial alpha Fibonacci reversal zone. But very powerful lesson on Apple. It's all about bold pink line. Remember that? Key support. Exact same thing on Tesla. Identical key level. The only difference on Apple, it's 124. So, Carlton loves trading S&P. He can't get enough. Carlton is my dearest friend for life. Listen to Carlton's podcast and his journey. Because he trades as institutional trader does. Every trade a different instrument, every trade a different time frame, every trade a different account. So if in today's markets everyone had seen oil news, this is oil traders at historical high. Let me remind you the power of the system on oil in the last 5 years. That started with oil crash, 2015. 2016 oil reaches ultimate bottom. Intelligent stock oil trader looking to buy oil stocks at the bottom. Looking at monthly chart, not 1 minute, not 5 minute, not 15 minute, but if you do day trade, this is where you buy. You never short near these levels. So when oil skyrockets and doubles in value, 2 years later, you should not be surprised. And many months and years in ahead, you know where oil would crash from. So when oil's selling off, you're not surprised. Skip forward to 2020. Sell-off is on. Oil pointing to 10. And you knew this 2 years in advance. Here's oil in 2020. Sell-off is on. Current oil contract pointing to negative number. We've never seen anything like it. Do negative numbers exist on futures? Apparently, yes. As intelligent trader, you're buying stocks at the bottom. You're not shorting near these levels. And when oil skyrockets, it's a beautiful news. The only thing that's left is a bold pink line. When this brick wall is out, oil skyrockets. And when hedge fund manager trades oil, of course. I've been working with Joseph for the last 6-7 years. But Mustafa quitting his full-time job, accomplishing this during crisis. Are you a day trader or are you a stock trader? No matter what you trade with institutions. You never, ever, ever trade against them. And that's oil right now. We're no longer at the bottom, are we? This is key support on oil. So no matter how bearish or bullish news is, you understand many, many months in advance, you never, ever, ever want to short into this level. 61 is a lifeline on oil. One step at a time. On every single trade, rules must be obeyed. And that's S&P, Bitcoin, oil, and Apple with Alpha Fibonacci system during the crisis and since 2015. So intelligent trader who trades at key institutional zones spends very little time trading, does not spend endless ending hours in front of the screen, So what would your trading be like if you knew this morning, if you knew many days in advance that this is institutional buy point? Have you shorted near these levels or have you obeyed the rules? What kind of trader are you? This is a market. We're still stuck here. But at the market open, we were here. And we knew this many, many days and weeks ahead. And that's the power of institutional trend system. You decide if you want to trade Tesla, if you want to trade S&P, or if you want to trade Bitcoin or oil. Price is price. Exactly same bottom as on oil in 2016. Played out on S&P this morning on every single chart. Right now it's not the bottom. It's a brick wall. It is the top. And that's identical level as support on institutional chart on oil. Only you can identify. Do you want to day trade or do you want to position trade? You never babysitting the charts. You're a quality trader. And it doesn't matter if you trade Dow or stocks. It doesn't matter if you trade options, NASDAQ, metals, gold, Bitcoin, anything you choose. Listen to podcasts. Read what students do. Because if these students can do it, so can you. So if you strategize as institutional traders do and identify key institutional trend reversals prior to placing a trade, you will trade stress-free. You will enjoy trading. You will enjoy long-term positions. You will enjoy trading on any instrument you choose. So ask yourself a question. If you were riding Goldman Power, would you sleep better at night? If you traded with Morgan Stanley on your stocks or futures, would you be drastically less anxious? Would you stop worrying about next crisis? Choice is yours. Brad learned his lesson well. My dearest friend for life started the course 3 years ago when he was making $10 an hour at Best Buy. Listen to his journey and what serious trader has done, understanding extremely well that only when you're riding institutional power you can become successful. If Brad can do it, if Carlton can do it, if Richard can do it, so can you. Trading this pure price. Can you trade Dow futures? Of course you can. Word.z means your trade will reverse. Precise entry, precise stop, precise targets with institutional trends, institutional trading ranges, institutional power. But if you decide to trade Amazon, why not? Price is price. The only difference, trade hold time. This is Amazon since 2018, stock mid-trend. It's exact same level that's playing out in front of you on S&P right now still that we knew many hours ahead. So while S&P remains frozen, so is Amazon in 2018. But many months ahead, you know where Amazon would crash from. And when Amazon does exactly this, no one should be surprised. It's alpha Fibonacci reversal zone. And the reason system traded globally on all instruments. And Amazon continued doing this. 3 times in 2 years, crushing $700 per share, $300 per share, $600 per share. You're buying the bottom. You are not buying the top. You are intelligent trader. That's it. Choice is yours. What you will decide to trade. So if you trade with rules of the Alpha Fibonacci system, with institutional power, with precise entry, with precise stop, with precise targets, you trade stress-free. So I highly encourage you to come to the website and join us in the trading room, where you can see the power of the system live. But until then, please review everything on the website. Under reviews, you can see thousands and thousands of emails I receive. It never gets old. You want to trade options? Of course you can. You want to trade stocks? Absolutely. Choice is yours. Can you win Forex tournament? Of course, if you obey the rules and make an effort. So please, view and read what traders do globally. Because if these traders can do it, so can you. It never, ever, ever gets old. I worked with Fariboard yesterday. As he says, your levels work like a charm. At this point, he's up to 19 trades, only 2 negative. That's it. Denzel trading Forex. Every trader, different instrument. Every trader, different account. I cannot upload tens of thousands of emails, but I can show you clearly. Alpha Fibonacci system applies to everything. You can trade stocks, you can trade options, you can trade Forex, because price is price. It's exactly the same on all instruments. This never gets old. Receiving emails from my student. If these traders can do it, so can you. When you come to our homepage, please choose from option appropriate for you. And you can be another Emmanuel, Brett, Carlton, Ken. Currently, we're offering the biggest discounts ever, up to 5,000 from each package. This is a lifetime system for any platform or lifetime software for Ninja 8 with 3 months group course and 4 months private mentoring. Video library with hundreds of videos and modules included. I teach live. I run trading room live. I've been doing it for 11 years. So please, listen to our incredible traders. Listen to students' podcasts. It never gets old. What's possible if you make an effort? Because if you do, the skies are the limit. The latest podcast with Sue, brilliant, intelligent woman in Texas. I love working with Sue. She's making phenomenal effort. When S&P and gold not giving much, she's moving to options. Because if you can trade one, you can trade them all with Alpha Fibonacci system. So please listen and review, because if these traders can do it, so can you. Any questions for me, do not hesitate to contact me 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much. It's been my joy and pleasure being here with you. I love what I do. If you are serious to become institutional trader, you came to the right place. I teach live in online classes. Every single day, traders from all over the world, from Australia, from Middle East, to Israel, to France, to Saudi Arabia, to Dubai, to Florida, to New York, Arizona, Utah, California, Colorado. Having a lot of students in Colorado, meeting with some of my dearest students next week. So please, if you would like to see system live, request a guest pass. And never hesitate to contact me. Thank you so much, everyone. It's been my joy and pleasure being here with you.
Hi, my name is Bob Iaccino. After 12 years developing a system which last year generated a 73.3% win rate and beat the S&P 500 by 254%, I've decided to share my story. I urge you to keep watching because I believe 2021 will be a crucial year for all of us. Rewind about 20 some odd years. I woke up that morning with a terrible headache. The pain was absolutely unbearable. And while I was on the verge of one of the biggest years of my trading career, there was just no way to focus through that kind of pain. I remember how my wife whispering in my ear, "Do you want to go to the hospital?" felt like a sledgehammer to the side of my head. A few hours later, after vomiting from pain, my wife rushed me to the hospital. A long afternoon of painful tests later, and nothing. Nobody could tell me what was wrong. They pumped my body with painkillers, scheduled an MRI, and sent me home. Fast forward to Easter weekend. My wife and I would drive to my mother's house to spend the day with her and my father. I woke up that morning and I couldn't see out of my left eye. It wasn't dark, but more as if someone placed like a white sheet of paper over the left side of my face. I kept it to myself, thinking it would just clear up. I was wrong. I knew the situation was far too serious for me to continue hiding it from my wife. Once I told her, she forced me to pull over and drove me to the nearest hospital. Just like last time, test after test showed nothing. This time, though, they immediately sent me to get an MRI. And the following morning, my doctor said the scariest 5 words you'll ever hear. You have a brain tumor. It's very difficult to describe what you feel and what you go through when you hear those words. For me, the typical thoughts of family and friends and how much time I might have left flooded into my brain. But something else hit me as well. Work. My trading career had been moving along in big ways. From my early days on the CME, Chicago Mercantile Exchange trading floor, for working for Japan's 3rd largest brokerage house, to a new role at Smith Barney, who had just bought the brokerage house. My success to that point hinged on one thing, my brain. As you can probably imagine, it felt uniquely cruel that the thing I relied on the most was now literally in a position of killing me. I didn't know it at the time, but it was a blessing in disguise. I'm not going to bore you with the details now, but the important thing to know is the brain tumor devastated my pituitary gland. The pituitary gland is no larger than a pea, and it's often referred to as the master gland of the human body. One of its functions is to control what's known as the stress response. Harvard Medical School puts it this way: as the initial surge of epinephrine subsides, the hypothalamus activates the second component of the stress response system, known as the HPA axis. This network consists of the hypothalamus, the pituitary gland, and the adrenal glands. There's a very complicated neurobiological response your body goes through when confronted with fear or stress. In fact, this process literally alters how you behave. It's this process which makes some people freeze in the face of danger or jump into action. So what does that mean? Well, in a very real way, I have no physical sense of fear or stress. In other words, the biological changes which alter how you think and process information under stress no longer happen to me. Let's say you've been afraid of heights your entire life. Now imagine waking up one morning and being able to stand on the top of the Empire State Building without a care in the world. How would your behavior change from that point forward? What would you do knowing you wouldn't physically feel extreme stress or fear? Well, that's precisely what happened to me. Now, intellectually, I know if I'm in danger or not. But unlike most people, my body doesn't trigger the stress response when faced with stressful situations or emotions. What does this have to do with trading in a stock market? Well, if you're in the stock market, you fall into one of two groups. You either give in to your emotions and follow the crowd, or you ignore the crowd and gain from others' fears. Everyone likes to think they're rational and dispassionate when it comes to trading. You've likely heard the advice of not getting emotional when it comes to trading. Whether by coincidence or not, my trading and investing success skyrocketed after my ordeal. And due to my own natural curiosity, I needed to find out why. I came across an interesting study out of MIT, which found a clear link between emotions and trading performance. The more intense the emotions, the worse the performance. And there's more. According to a popular trading platform, 80% of traders lose money in just 1 year, and the median loss is 36.3%. Here's another troubling fact. A North American Securities Administration Association survey concluded 70% of traders will lose nearly all of their money. You've likely heard legendary investor Warren Buffett once say, "Be fearful when others are greedy, and greedy when others are fearful." That's great advice, but most people can't do that. And in fact, it's not even your fault. Most people simply can't control the stress response and the biological chain of events which occur. The fact is, this neurobiological response happens automatically, and it alters the way you think. In most cases, this is a good thing. It's your natural fight or flight response. But when it comes to trading, it's completely harmful. Which is why over the last 28 years, I've been developing a system which removes the emotion on your part. Not only have I seen with my own eyes the danger of being too emotional with the markets, I've also experienced how much more successful I've been since my tumor. I began fully running this system with real subscribers back in March of 2020, and here's a quick snapshot of the results. Plus 18.97 in March, plus 4.51 in April, plus 3.98% in May, plus 3.81% in June, minus 3.4% in July, but plus 10.86% in August, minus 2.72 in September, and then again plus 4.30 in October. Add to that plus 7.15% in November and plus 4.19% in December. That's a cumulative return of 62.79%, which is 254% higher than the SPY, which is the most actively traded ETF that tracks the S&P 500 index. Keep in mind, I'm not talking about theoretical backtesting like some people try to pass off as real results. These are the real published alerts and the results from the system. As you can see, we had 2 losing months, but the losses are small compared to the wins. That's how the system is designed to work. See, even though we have an over 70% win rate, the reality is all trading systems have some level of risk, and all systems generate losers. However, taking this emotionless approach, we've been able to keep the losses to a minimum. Even more important, I'll explain in just a minute how using this system will be even more important in the year 2021. This approach could transform your trading results and lead to life-changing results. And by results, I mean a greater than 70% win rate and beating the overall market by 2.5 times in 2020 alone. As I mentioned earlier, I started my career in 1992 as a phone clerk on the CME trading floor. I wasn't very good at it. I struggled in the early years, and I was a horrible trader when I first started. But then I started to gain confidence as I began to understand the markets better. Then in 1996, my brain tumor changed everything. It gave me, honestly, an unfair advantage because I was finally able to remove emotions from trading. For me, this was very much literal. Over the next decade, my career completely transformed. I went from the Chicago trading pits to some of the biggest banks and brokerage firms in the world. I worked at Smith Barney and at Germany's Commerzbank. I ran my own commodity pool at a Chicago-based trading firm. I was a principal and a member of the investment committee for a very successful hedge fund of funds. And the list goes on and on. I've also done over 2,000 interviews dealing with the markets, where you may have seen me on CNBC, Bloomberg, Fox Business, Yahoo Finance, TD Ameritrade, and so on. Through all of this, I discovered a very simple truth. Trading is hard, and anyone who tells you otherwise is being less than truthful. It can be an expensive roller coaster ride of emotions. When you're on a winning streak, you feel like you're on top of the world, but then you make a few bad decisions and it's all gone. Months of hard work and profits gone, sometimes in just one day. I'm sure you've been there. It turns your stomach. You feel dumb, like a failure. Maybe your position was too big. Maybe you didn't cut your losses. Maybe you just held on and hoped the market would turn around. The bottom line is your emotions got in the way. It happens to everyone. Trading can be nerve-wracking, and sometimes it can get even worse. Take 2001, for example. At the time, I was running a trading desk for Commerzbank Futures. Back then, it was the third largest German bank in the world. The day started off as usual. I was on the CME trading floor with other traders, Peter Ori on my left, Paula on my right, when suddenly the phones lit up like a Christmas tree. Call after call came in, rapid fire, just one right after the other. The pit erupted into an almost deafening roar. This was something I was used to. Anytime a piece of news would happen, hit the wires, or the Fed would make an announcement, you'd get what I could only describe as pure pandemonium. I did what I normally did. I checked our positions and our clients' positions to make sure we weren't overexposed to whatever was causing this roar, then waited for it to die down. This time, though, it didn't die down. This wasn't typical. I looked up at the giant jumbotron on the trading floor and immediately knew this would not be my typical day. A hijacked plane smashed into the World Trade Center. It was September 11th. Then 15 minutes later, another plane crashed. About 45 minutes later, an announcement blasts through the PA system on the trading floor. The United States is under attack. We're told to evacuate, but the desk I was running had a large number of trades still open. I asked anyone with kids to leave and go home to their families. For everyone else, I let them know it was up to them to stay with me as we closed out these trades. But no matter what, I'd be the last one to go. As hard to believe as this may be, I wasn't afraid. I wasn't freaking out. I was very calm. And for the first time, but not for the last time, I remember thinking, thank God I had that brain tumor. I knew the gravity of the situation, but like I said before, I don't exactly feel the fear or stress, which is why I continued to manage the trades. And the last thing I did was to close a trade that I had opened that morning, which I wasn't supposed to do. You see, the rules of that particular system said we were supposed to hold that trade for 2 business days. But this was an unprecedented event in history, and I knew that the best thing to do when you have no data to go on was to eliminate the risk. Guess what? Turns out that trade was a huge winner, and my clients made more than 10 times the money they were supposed to make on that trade. I knew the trading floor was going to be shut down for 4 days, and we had no idea what was going to happen or when it was going to reopen. Doomsday thoughts ran through everyone's mind. Will there be a full-fledged invasion? Are we safe? Will the markets crash? Nobody knew. I learned a few things that day. First, news stories and unexpected events shock and scare people. It doesn't even have to be as big as a terror attack. The fact is, most people go into fight or flight mode quickly and easily. Second, I learned anything can happen at any time, even the impossible. Before 9/11, the general public was completely oblivious to the possibility of a terror attack of this scope on our soil. What's worse is, no one can accurately predict an event like this. So what do you do if you can't predict these events? How can you safely navigate the market without big losses? Despite all the craziness in the world, in the news, and in politics, how can you consistently beat the market without great stress, without typical hesitation, without constantly watching the market and living tick by tick? Is it even possible? Academic studies going back decades prove time and time again, active traders who watch the market tick by tick have a hard time making money. In fact, the opposite is generally true. They lose money, and over time, they tend to lose all their money. The evidence also shows following the crowd is a bad idea. A recent study makes the point obvious. It examined Robinhood traders from May 2018 until August 2020. It looked at events where traders crowded into specific stocks. The most recent example of this is the craziness around GameStop, ticker GME. What they found is prices usually spike, then reverse. Usually the reversals are extremely painful, and in the case of the Robinhood study, the reversals actually became negative returns. We don't chase things like GME because, number one, I don't really feel the great FOMO that other people do, thanks to my tumor. I know the value of sticking to the process, but also because we were around for pets.com in the crash of 1999-2000, we remember what the aftermath of these frenzies look like. Another study tracked 1,600 Brazilian day traders for a year and found that 97% of them lost money. 97%. In fact, only 1% of them earned more than the Brazilian minimum wage. There's more. A study in Taiwan used complete transaction data for the entire Taiwan stock market over a 15-year period. Their conclusion? Less than 1% of the day trading population is able to reliably make money trading. And don't think for a second that applies to the amateurs only. Academic studies overwhelmingly prove professional money managers underperform their benchmarks over a multi-year period. In fact, a staggering 85% of professionals fail to outperform. I could keep going, but you get the idea. Making money in the markets is hard, but it's not impossible. I've spent decades in this business, and I've had only 3 down years. Now, how did someone like me, the son of Italian immigrants from the west side of Chicago, succeed for so long while the vast majority of traders failed? For me, the answer is obvious. You need a system, a process. A trading system that can consistently beat the market, take emotions out of trading, and can survive the ups and downs of the news cycle and irrelevant events. I look for this type of system everywhere, but they're not just sitting on shelves at Target. What I was looking for wasn't available to regular people like you and me. Sure, Wall Street and big hedge funds have these tools, but not us. While I was at Smith Barney or Nico Securities and Commerzbank Futures, I had access to the best tools in the world, the best software money could buy, the types of systems you couldn't possibly imagine, but they were no longer available to me when I went off on my own. Have you ever felt like you just can't win? Well, you're 100% right. You can't win. And someone else who's much richer, much more connected, and much more powerful is winning day after day while the rest of us struggle and lose money. And the fact is, the playing field simply isn't level, not by a long shot. But that didn't stop me. It actually motivated me. I became obsessed, so I started building my system, and I did pretty well. But I couldn't do it all on my own. I needed help, and the help I needed was lurking inside the very hedge funds that I was looking to beat. After 8 years of relentless work on this emotionless system, I met a very special human being. Let's just call him Oz, the man behind the curtain. He went to Northwestern University, received a master's in electrical engineering. He's a math whiz, and he's an insomniac. During one of those sleepless nights, he created and patented a technology that helps to power red light traffic cameras. I hope that doesn't make you hate him. Later, I would learn he was the man who hedge funds actually hired to break their systems, literally. We met after Oz bought one of my courses and showed up at my live event at the University of Illinois. With around 100 people in the room from all over the country, he comes up to me just before lunch and says, "Hey, my name is Oz. I bought your course, and it's great, but I can make it better. Would you like to know how?" Now, a lot of people in my position would have likely ignored him. But not me, though. After the last session, I met up with him again to see how he could improve what I had developed. And sure enough, he actually did exactly that. The changes he made are technical, so I won't bore you. But I knew I had to partner up with him. I knew we'd develop the type of system I was after. What I didn't know back then was that was the start of what I now call the 10-stock system. My brain tumor, my 9/11 experience, meeting Oz. These events were random and unrelated, but all of them were needed to create the type of system I knew people like you and I needed. And remember, the criterion is simple. The system must consistently beat the market, take emotions out of trading, and survive the ups and downs of the news cycle and irrelevant events. Let's take that first point. The system must consistently beat the market. Take a look at the 2020 track record. I started sending alerts in March 2020, and we did as follows. Remember earlier when I told you we had 2 months last year showing losses? Well, the system is designed to be emotionless, so these losses didn't hurt us, not one bit. In fact, as you can see from the chart above, we beat the S&P by an astounding 254%. But what does that mean in real life with real money? Let's say you have a $25,000 portfolio. How does the 10 stock system compare with some of the other things you could have done in 2020? The first option is trading it on your own with no help. Could you have gotten lucky? Definitely. But study after study shows the more likely scenario is you would have taken on massive losses. In most cases, you would have lost it all trying to trade. And remember, that's not me saying it. It's MIT, popular platforms like Robinhood, even the North American Securities Administration Association saying it. In fact, according to the NASAA, there's a 70% chance you would have lost nearly all of your money. So please, even if you decide not to use my proprietary 10-stock system, do not go it alone. The risk is far too great. Now let's say you decided to put it in an S&P index fund like the SPY. You would have made $4,425 or 17.7%. And that's not bad. But had you used my 10-stock system, you would have made $15,698 or 62.8%. That's 254% more than the S&P, a 2.5 times return versus the S&P. Remember, it's the same $25,000 portfolio, but the difference in the gains is significant. And get this, you actually take on less risk using the 10-stock system than putting it into an index fund. Take January of 2021, for example. The 10-stock system returned 5.96%, while the S&P, after making new all-time highs, turned around and fell to finish the month down 1.5%. This is because we took profits all month long and had very little exposure to the downturn when it came. And they always come. And then we have the last option, which is do nothing. To me, this is probably the worst category. It gives you the illusion you're playing it safe, but you're not. The problem with the do nothing crowd is they think they're protected, but they are not. Why? Because their purchasing power is declining. In fact, it's getting obliterated. Take a look at the U.S. money supply chart. The amount of dollars in checking accounts in the banking system exploded in 2020. It increased at the fastest rate in history. Now zoom in on November 2020. Do you see the jump of more than 1 trillion? That means inflation is around the corner. Frankly, it's already here and you just don't know it yet. See, the government tells you inflation is only about 1 to 2%. That's because the government's metrics for calculating real-world inflation are at best outdated, at worst a complete fraud. I can't believe I'm about to say this because I love this country. My father came here as a legal immigrant with a green card and became a citizen, worked hard, joined the middle class. I still believe it's the greatest country on earth and I consider myself a patriot. But the way our government portrays the level of inflation to the people reminds me of how deceitful China is with its people. So if you're in the do nothing crowd, you're in a really bad spot. You think you're saving your money, but you're not. You're letting it sit in a bank account and it's wasting away at an alarming rate. You can no longer stand on the sidelines. You have to act now because this situation is only going to get worse. Let me tell you what the 10-stock system is. The core portfolio never has more than 10 stocks. And with every alert, you get the entry points, price targets, and stop losses, and any adjustments we're recommending on any open trades. In other words, each trade has a defined risk. Why? Because this hits on the second point of the perfect system. The system must take emotions out of trading. Let me show you some recent examples. Take a look at Intel. In this example, we took our profits before the drop. We made 11%, while others might have lost over 20% if they held through the price drop. And we know by studying trader psychology, that's exactly what most people do. This is one of the major benefits of the 10 stock system. By following it, you take profits constantly and consistently. While other people could be down 50% in a crash, we could be up 30% because we limited the risk ahead of time and get out while everyone else keeps piling on losses. Another strategy we use to manage our losses is timing based on price action and stop loss adjustment. We get in and out of the trades within weeks, and we raise our stop losses when needed to protect capital. In a moment, you'll see why this is so powerful. That way, when we hit our profit targets, we get out and move on to the next trade. We don't look back and wonder if we could have made more because it's irrelevant and counterproductive. Remember, the key is to remove emotion, not give into it. The reverse is also true. If the stop loss gets hit, we don't watch to see if price recovers. We simply move on. Losses are part of the game. You should always expect them because it simply doesn't matter. As you saw from the chart earlier, our system gave us 2 losing months, and yet we beat the S&P by 254%. If you want to play this game, you will win and you will lose. And my job is for you to win more often than you lose. My system is designed to win roughly 70% of the time. The key is precise methodology combined with appropriate risk management. And based on our performance in 2020, I know this approach works extremely well. Something else to consider is that we generally look at over 4,000 stocks, and then we narrow it down through our proprietary process to about 100 to 200. And ultimately, we pick the best ones. This allows us to focus on the most profitable trades the market has to offer without wasting time with the losers. And since our hold times tend to be short, we're able to profit over and over again in a short period of time. Take a look at another trade we did in INTC, Intel, as an example. On March 18th, we got in at $45.50. We were out at $53.14 on March 24th, less than a week later. Intel kept going higher, but we do not care because we took our cash and allocated it to something else that was moving. Earlier, I talked about the timing strategy we use with the 10 stock system. Let me show you how powerful this is. Most people use a buy and hold strategy as a way of removing emotion from the equation. In theory, this makes sense, but in practice, it can actually be detrimental. Let's use these Intel trades as an example. As you saw, we traded Intel multiple times last year. But let's say that instead of trading using the 10 stock system's timing and stop loss strategies, you bought on January 1st and sold on December 31st. You'd be sitting on a 17.3% loss. Compare that to what the 10 stock system did with the Intel stock. Remember, this is the same company, Intel, as well as the same period of time. However, instead of buying and holding, we use the 10 stock system, and what you actually achieve is this. By simply following the system, you could have made a gain of 11.3%. But here's the kicker. Imagine we did this with multiple names over a full 12 months and annualize that 11.3% gain, and it becomes a 68% gain. In other words, we took what would have been a 17.3% loss and turned it into an annualized 68% gain. Can you see the power of combining this system of emotionless trading with timing and strategic stop losses? Let's look at another example, this time in Prudential. Take a look. We were in at $42.50 on March 18th and out at $54 on March 25th. Again, in a week for a quick 27.1% gain. Think about what that means. The only time your money can grow is when it's in the market. But the only time your hard-earned money is at risk is also when it's in the market. If you can pull a 27.1% gain out of the market in a week, that's an annualized return of 1,411%. But it gets even better. Had you gone with a buy and hold strategy like in the Intel example, you would have had a loss of 17% as shown here in this chart. Compare that to the 10 stock system where we traded in and out of Prudential twice last year with an average hold time of 75 days. And you get a whopping 142% annualized return. Simply taking profits and limiting losses, we took what would have been a 17% loss and turned it into a 142% annualized return. Of course, not every trade will be held for such a short period of time. Sometimes we'll see a trade where it makes sense to stay in a bit longer, more like a month or even more. Have a look at AMD, Advanced Micro Devices. We entered at $85 on November 20th and exited less than a month later on December 15th at $96.85 for a quick 13.9% gain. If you can pull a 13.9% gain out of the market in less than a month, that's an annualized return of 203%. Are you starting to see why the 10 stock system is able to beat the S&P and hand you hedge fund-like gains without having to constantly watch the markets? In the case of AMD, had you gone with a buy and hold approach, you would have done quite well. The total gain would have been an annualized return of 95%. We can all agree that's a great return, but using the 10 stock system, you would have more than doubled that gain. And what's even more impressive is all of this is done automatically for you without you having to think about it. Now take a look at Cisco. We got in on April 6th at $41.50 and got out a month later on May 5th at $40.95. As you can see, this was a loss of 1.3%. The momentum faltered and we continued to adjust our stop loss until we got stopped out for a small loss. And again, that's the beauty of the 10 stock system. We protect our downside. If we're up on a trade, we adjust our stop loss. We don't sit and watch our profits disappear. But then take a look at the very next trade, ARNA, Arena Pharmaceuticals. We entered at $51.25 on May 5th and exited on May 21st at $58, which handed us a 13.2% gain. On this trade, let's say you would have gone the buy and hold approach. Again, if you bought on January 1st and sold on December 31st, you would have achieved an impressive gain of 67.3%. Not bad at all. However, using the 10 stock system's timing and stop loss approach, we generated a 13.2% gain in less than 3 weeks. Annualized, that's a 300% gain. Another example we have from the system is EYE, National Vision Holdings. We entered at $31.50 on July 24th and exited on August 7th at $36.50 for a 15.9% gain. Had you bought EYE on January 1st and sold it on December 31st, you would have had a nice gain of 38.2%. Again, that's not bad at all. Following the 10 stock system though, we achieved a 15.9% gain in 2 weeks. That's an annualized 241% return. These are all real stocks traded with real money by our small group of members. And these are all real results. And since the goal is to be consistent over time and not take on more risk than necessary, the gains tend to be smaller. This is something I really need to stress. If these consistent winners week after week, month after month, and year after year bore you, then this is not for you. I need to state clearly, I'm not going to hand you the next GameStop. I have no interest in that type of trading. It's short-lived, irrational, nonsensical speculation, and that simply isn't what I do. Sure, it's fun when it's all going well, but eventually that crazy game of musical chairs come to an end. The music stops, as it always does, and the reversals are some of the most painful things I've seen. I've seen this movie before, and it's a horror story for most. Personally, I do think a small, very small portion of your capital should be in speculative trades, but that's not what most people do. What my 10 stock system does is simple. It wins consistently and with well-managed downside risk. The one drawback, if you can even call it that, is the individual stock gains are smaller. However, they add up to very big wins over time, as shown by the fact that the 10 stock system outperformed the S&P 500 by 254% last year. You may not know this, but the US stock market ended 2020 on all-time highs. Despite the pandemic, despite the shaky start to the year, it broke the prior all-time high record. Remember that study I mentioned earlier? Over 85% of professional money managers rarely outperform their benchmarks. What that means is the pros didn't beat the market. At the very best, barely kept up with it. The 10 stock system outperformed the market by a huge margin of 254%. Like I said before, if consistent wins just isn't for you, I hope you get some value out of what I've shared with you here, but we're not a good fit. However, if you understand massive home runs based on irrational speculation is extremely dangerous to your financial health and well-being, if you can see the value of consistently winning on your trades all year long, then continue to watch. Inside the 10 stock system, you'll get 2 to 8 trade alerts per month. The reason for the high level of activity is what I mentioned before. The wins are smaller, but we're increasing the timing of trades for bigger gains, which is why you get those 2 to 8 alerts per month. If you recall, my brain tumor destroyed my pituitary gland, and because of it, I have no physical reaction to stress or fear. I knew from that experience I needed to develop a system that mimics those same feelings for you. Now, I can't do anything, obviously, about your body's natural response to stress, and I certainly would never wish a brain tumor on anyone. But I came up with an ingenious way to experience little to no stress when following the trade alerts that I send you. How's that even possible? All the alerts are sent out at night. You don't have to watch the markets tick by tick wondering if you've made the right decision, and you won't be distracted by intraday craziness. Right before bedtime, which incidentally is the time when the least amount of stress hormones are in your body, you'll review the alert I've sent you, punch in a few numbers, enter your trade, and then when you sleep, with a peace of mind knowing your entire trade, the entire trade, position size, risk exposure, target, profit, etc., is already set. The only thing you have to do before the market opens is make sure you're not getting in below the stop price that we sent you in the alert. That's it. If there's anyone who knows the huge advantage you get by removing stress and emotions from trading, it's me. It's this edge that's given me a winning track record for at least 8 of the last 10 years. That's why the financial news shows always call me for interviews and feedback on the markets. Even as recently as August 21st, 2020, right in the middle of a pandemic, who did Yahoo News call? I truly believe sending you the alerts this way is how you win over and over again, by setting up the trade, the entire trade, before you go to sleep, and only checking it once in the morning, which allows you to go about your day without thinking or worrying about what the stock market is doing. Remember, the way I have you structure the trade, you'll know exactly when to get in and when to get out. Profits will be taken automatically. No need to stare at your screen all day long and run the chance of being emotional and having that get in the way. The downside risk is covered. You'll know ahead of time what your risk is. The upside profit potential is also covered. You won't have to wonder when to sell and take profits. Again, all of this is done automatically the night before when you follow the alert I'll send you. So in the evening, around 7 p.m. Eastern Time, you'll get an email which looks like this. Quick and easy. I'll tell you exactly what you need to do, and you'll have plenty of time to act. From the comfort of your own home, and in fact, so simple, you can even do it all on your phone. No need to even fire up your computer. Just a few clicks to enter the number of shares and your entry price, your profit target, and then let the market work for you. Remember, our profit targets are automatic. So when the profit target gets triggered, money is automatically deposited into your account. You don't do a thing. Imagine waking up with $5,000 in profits or even $10,000 and realizing you didn't have to be glued to your computer screen. You didn't have to experience the roller coaster madness of the markets. You did this without letting your stress and emotion get in the way. Another thing to keep in mind is that you'll always hear from me. Even if there's no changes to the portfolio on a given day, I'll still email you and let you know nothing's changing. This is white glove service, and I'll hold your hand every step of the way. And if you have any questions, if something doesn't make sense, ask me. I'll host a Q&A session to answer your questions about the service. Also, once a month, I'll give you my thoughts on the market and the economy. It's a quick read that will keep you informed. I also cover topics you might not read about in the Wall Street Journal or hear about in the mainstream financial media. I'm not going to sugarcoat anything. I'll tell you the truth. On top of that, you'll receive a portfolio update video from me every 2 weeks. I'm not the prettiest face on the planet, but every 2 weeks, I'll show up in your email looking like this. The most recent topics in my video have been the GameStop frenzy, as well as stimulus and that's effects on the markets. And finally, once per quarter, I'll review our performance. I'll look at our winners and our losers and summarize how we did compared to the S&P. As you might imagine, this type of service isn't cheap. Price is fair, it's certainly not cheap. The value of a lifetime subscription is about $10,000. The cost for a 1-year membership is $3,000. Like I said, it's not cheap, but it's fair. As I mentioned earlier, if you used a $25,000 portfolio and followed our alerts for 2020, the 10 stock system could have made you $15,698. So really, you shouldn't overthink this. Here's why. The moment you become a member of the 10 stock system, you get access to a suite of life-changing, money-making resources and benefits. And that's no exaggeration, as we've seen here today from members like our current member, Alan. Hi, Bob. Closed my 50th trade today since being a member since March 23rd, 2020. Closed realized profits, $27,911.20. Average $3,488.90 per month. Appreciate all your efforts and mentorship. Alan. The 10 stock system members receive access to my entire portfolio of alerts with detailed buy up to prices, entry and exit prices. In the past, subscribers who followed these alerts have seen gains as high as 27.1%, 23.3%, 19.4%. That's enough to pay for the service. Remember, one of my biggest benefits of my 10 stock system of alerts is you get to take gains over and over. It allows you to take thousands of dollars and large percentage gains off the table and not worry about whether the value of your portfolio fluctuates. And don't forget the video updates I send out every 2 weeks. I never hide from you. I'm just not wired that way. I'll give you the good, the bad, and the ugly on the markets. If the system is signaling for us to back off, that's exactly what we'll do, and I'll tell you about it. Now, as the newest member of the 10 stock system, you'll be lined up to profit immediately. The first thing you'll get your hands on is my position size calculator training video, where we dive deep into one of the most important areas of trading. The topic can be quite boring, but if you've ever asked yourself how much or how little of a particular stock to buy, or if you're wondering what to do with the 2 to 8 alerts that you get from the 10 stock system, this is a video you'll want to watch. Truth is, at $3,000 a year, the 10 stock system is a steal. And while I don't know how long I'll keep the membership open, I can tell you I'm already planning the next price increase because frankly, $3,000 is simply too good. But today, you won't pay anywhere near that. And that's for 2 very important reasons. First, because you watched this far, I know you're serious about finally being one of those people who knows exactly what to do amid all the Wall Street craziness that scares the hell out of everyone else without the dangerous ups and downs most traders go through. For this reason, I want to make it a complete no-brainer for you to join and take advantage of all the emotionless trading. And second, because this is the first time I've officially opened up the 10 stock system to a large group of new subscribers. Aside from the small circle of subscribers who have been profiting handsomely, this is the first time I've opened up access. For those 2 reasons, I'm going to offer you an incredible deal. I'm going to slash half off the yearly new membership fee. Instead of $3,000 for a very short time, you'll get a full year for half off. That's just $1,500. So today, you get access to hedge fund quality research, which allows you to profit without letting stress and emotions derail you. In other words, today only, and for a very short period of time, you'll get recommendations, guidance, and research into this market for around $28 per week. You see why I told you earlier not to overthink this, not to procrastinate? All you have to do is skip 1 night out at a restaurant per month, and that's enough to get you in front of these nightly alerts that can lead to very nice profits. Of course, not every trade is a winner, but with a 70% win rate, you'll have what I call profit windows more often than not. And those profit windows add up to very big gains, life-changing gains where you potentially never have to worry about money again. You can add those restaurant visits back in and more. So when you become the newest member of the 10 stock system right now, you'll get to join for just $1,500 per year, a 50% discount. You get it for half off the regular price, which comes to a measly $28 a week. You should see an order button below this screen now. You'll be taken to a secure membership enrollment form where you can review the details of your offer and make sure it's the right offer for you. You get all the membership benefits discussed here, instant access to the position calculator training video, the core portfolio, nightly alerts with full instructions, video updates every 2 weeks, and detailed portfolio performance tracking. You'll get all of this for just $1,500, which is just $28 a week. Plus another bonus. If you sign up today, I will send you an additional set of trades. I call them high beta trades. These are often faster moving and can include currency and commodity ETFs that don't make it to our initial screen, but still not only have the opportunity to provide you with extra profit, but can move faster and often farther than our core trades. They are riskier, but because we control risk and still use responsible position sizing, they can be a powerful addition to any portfolio. Last year, our high beta trades had a slightly lower winning percentage, but a higher reward to risk and shorter hold times than our core portfolio did, resulting in higher annualized returns. High beta trades made a full 24% more profit on average per trade than the core trades did. These can really move. Remember, if you want a full breakdown, you can click on the button now. This is a very time-sensitive offer being made to you. And I can tell you, you may not see the 10-stock system again, ever. Don't put this off. Don't procrastinate. At just $28 a week for a short time only, this is truly a no-brainer. Thank you.